T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, 5, start, 2, 1, booster ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond.
Separation confirmed. Guidance now converging. Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Yes, we're go on sleeping in late.
Discovery Houston, negative return.
Copy, a negative return.
Good morning, fellow apes. Welcome to AMC and ADD, where I sleep in, buy, hold, and screw hedges. It's amazing. It's the life. Oh boy. What a recovery. I got to miss out on some nice recovery. Did you guys see the volume spike here? What the heck? We don't normally have those kind of volume spikes until like 7 o'clock in the morning. Out of nowhere. Oh, well, it's only 5,790 in volume, though. Never mind. I mean, it is a volume spike compared to where it's been all morning, but, anyways, crazy. Let's look at some of the things that's going on today here as soon as the music stops. Alrighty. Yes, 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 yes. I overslept. It is what it is. Nice little. It's actually a little about 15 minutes over. Actually, it was about 45 minutes over sleeping for me. One of those instances where you hear your alarm go off and you're like, okay, well, I'll just lay here for just a minute more. But what do we got here? Shares available to borrow. Looks like we were at 950,000 earlier this morning, and it dropped down to 10,000. Then it went back up to 250. On the ETFs, a little bit of movement going on in there as well. Dark pool trading. Look at that, guys. So on 7/20, I guess that would have been Wednesday. On Wednesday, I felt like we would see Thursday or Wednesday's numbers. Sorry, Thursday's numbers report come in as a 70% or more in dark pool trading. And it was only 0.1% higher than the previous day, which I thought was so odd because it just seemed to me like the amount of resistance that they had to movement was ratios just seemed off, and I felt like there had to be a lot of off the market trading going on. But you know, apparently I was wrong. But it was only 0.1% more. But the very next day, sure enough, they broke that 70% mark yesterday. 71% of all trading done on off the market trading platforms. 71%. Um, that's ridiculous. So there's either so you can look at this a couple different ways. It's either there's institutional investors that are buying massive quantities of shares that are just being done through dark pools, or there, and this is the other theory that's out there, is that there is the hedge funds are grouping together uh, these group of shares purchase orders and sending them to the dark pools to be traded instead of on the market. But 71%, that's just absolutely ridiculous. That number is so high. I don't even understand. Like, what would happen? What would happen if those were actually traded on the market? What would we see the price actually be? That would be my question. Hmm. Well, maybe we'll get a taste of it today. Volume is super low. I think normally by now we'd see at least 200,000 to 300,000. So, but even with volume being low, it's the price is easily driving up. Um, I'm not sure what to attribute that to, because the bids don't look crazy high. In fact, it looks like a lot of manipulated bids in here. So I'm not really sure what's causing the price to drive up the way that it is currently. Let's look at options, see what's going on there. I think today's day yesterday was supposed to be Eric, but because my phone was jacked up, I didn't get his text until later, and so I made my price predictions first yesterday. I'm gonna have I think Eric go again first today. We'll just call yesterday a wash, and then I'll go, and then I'll have John go, and then John goes first on Monday. So let's see here. I'll refresh the options page. Let me get rid of some of this stuff on the page for you guys. Tally marks, go away. Alright, let's see what we got. Doesn't look like they've changed as usual. but let me make sure I have the most updated data so that we know what we're going into the day with. Yesterday, the last number that I had recorded was 1.85 million shares borrowed. We'll pull up Ortex data next and check it out and see if that's very close. The largest amount of call options is 56.1 at $40, which is a little higher, so I didn't quite update this at the very end of the day yesterday. The highest puts are at $38 and it's 35.8. And bet your bottom dollar that's going to reset today. I know that Duncan had mentioned that it seemed like to him that there might be a correlation to time of the day as to when those are being reset. So we'll watch that. We'll watch that because I roughly know what time that happened yesterday. If we see a reset around the same time this morning, it'll be interesting to see if there's a correlation there. So that's options for us. Let's see. The price is rising very nicely as it stands. Let's pull up the Ortex data. So short share interest stopped reporting yesterday at some point, and I didn't see it. Yeah, thanks. Looks like it's back up now. I'm reporting at 14.51%. The amount of shares on loan went from 92.743 to 93.72. So basically a million shares added, and I had recorded 1.85. So there's a little bit of a discrepancy there. Utilization is up. Quite nicely. We went from 83.56 utilization to 88.15. So that's very, 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 very nice. Congratulations to us on that, because that 80% number was 83% was getting kind of low. A reason that may have gone up. I was kind of thinking about this a little bit. I think that I know if you're trading through like Fidelity, there's a T+2 period, and if we look at closing prices, let me see if there's anything else on here that we want to look at real quick. Let me back out of this before I start talking about that. Okay. If you're trading through Fidelity, or probably through most any brokers, there's a T+2 period where your shares have to settle. That utilization number that's being reported may not actually be reported until after that T+2 period. So if you look at 2 days ago, 2 days ago the open was at 32.95 and a low of 31.15, and then it ended up closing at 34.62. So so there were some very reasonable prices that were going on there. And we could have had a lot of buy orders that went through, but they didn't actually settle until July 21st. So that's perhaps why we may have seen utilization go up just now, simply because of the fact that it doesn't report the increased utilization until 2 days later after those shares settle. So that could be a reason. I don't know for a fact. I'm just I'm trying to make sense of why utilization would have been so low. Utilization did go down if we look back on it, the point at which it was at its high last was at 92.97% on July 13th. So if we look at the price on July 13th, and on, we might see why that reason might be. So here's July 13th. So we were trading in the high 40s, mid to high 40s before July. July 9th was 48 on the open, closed at 46. And we went from 46, we opened at 44 to 42. So maybe July 13th people started selling, and we did lose utilization, but it didn't report for 2 days later, which was July 15th. So that would have been 1, 2 right there. So we started seeing some of our decreases. I don't know. It's a possibility. Something to think about. It's funny. I had a conversation with my son yesterday. So I need to apologize to you guys for not being punctual today, because I actually had that very talk with him yesterday about punctuality and why it's important. And so, in life, it's important to be punctual. Hello, Avast. Thank you for telling me all kinds of information that I don't care about. So anyways, I do apologize for not being punctual today. I will try to be better about that. I used to work with this guy. This is a long time ago, but we were talking about our resumes, and he had on his resume something about like shows up to work on time, and I was like, dude, I think you should take this off your resume. And he's like, why? And I said, well, I think it's kind of expected that you should show up to work on time. And if you put it on your resume that you show up to work on time, it almost might make them think that there's a reason why you would say that. And so I was like, I don't know, just, and he was like, no, man, I think it's a good thing. And, they like seeing that you're, that you show up to work on time. And I was like, I don't know, I just think it's expected. So anyways, I don't know. Maybe that's just how I am. But I do feel like that that's an expectation, not a quality of work. Let's see here. What do we have going on elsewhere? Citadel. How busy are you today, Citadel? They are busier. They're as busy as they get. They're right at the right amount of busyness, so nothing crazy going on over at Citadel right now. Take a look at the Fintel reporting. Still the same. No new information there. Citadel Fintel reporting. It's kind of interesting. I feel like I see problems with when I click on Citadels, it doesn't act the same way. It's almost like there's a freeze on their page or something. Okay, so price predictions. Getting kind of close. I'm gonna text Eric here in about 10 minutes if he doesn't text me first. Um, let's see. Where do we stand? Volume's really low, but it is picking up. It could very easily get to closer to 200,000. And then with the 7 a.m. pokies, it could put us at 4. If we don't hit 400,000 by 7 a.m., it's going to be another low volume day today. Now we did see a couple days ago when we had that spike in price, we did have low volume for that morning. It made it very difficult to, the price wasn't moving. There was no volume. It just seemed like a dead market. And then we had a huge up day. But today we're seeing lower volume, but the market's moving. Surprisingly. So I might have to go with the same prediction for volume. Oh yeah, did I hit my prediction for yesterday on volume? I didn't update it. Let's see. Yesterday we had 93.4 million in volume, and I did hit the prediction. The prediction was almost spot on. I said 80 to 100 million, so 93.4 is right in there. I might kind of go. I'm leaning towards the same amount of volume for today. Same amount of volume for today, and I actually tend to think today is a payday. It also is a bonus day for a lot of companies that pay bonuses. Your quarterly bonus would be coming out probably this paycheck. And the child tax, I've seen this actually posted on Reddit, but I also know because I got some, but the child tax credits are now being paid out, I believe, quarterly as well. Or maybe it's monthly, I forget which, but those first checks started coming out. I think they're quarterly. We just got our first check in the mail as well, and I know people were jokingly, I hope jokingly, saying that they were going to be spending on AMC. I don't know. I do hope and I don't hope. I don't know. So, low volume. Let's scan out a little bit here. So the last time we had a run up, the run down was equally as great and lasted for about 2 days. Then we had another run up, which lasted for a day and a half. So this run down lasted 2 days, almost was equally as strong as the run up. Which we had a beautiful George W on that. Didn't run up nearly as high as we would have thought we would have seen. I really felt this day would have had over 70% to try and keep the price down in dark pools, and it didn't end up being that way. I was so surprised. Run-up day, possibly? I might keep the same numbers I had from yesterday. If we had a run up, say we had another day similar to something like this, the price started at 35 and ended at like, let's go back in time here, 35, excuse me, opened at 35.14 and then it closed at 43.09. All right, I'm gonna increase my levels ever so slightly, maybe $1 in each direction. So that would put those $40 into the money by the end of the day, fractionally, ever so fractionally. So 40 to 43 maybe. I know the apes in general. Last night we're talking about a fight for 40 today. I'm trying to decide, is it going to be fractionally above 40 or is it going to be like right dead on? Because I'd like to almost move up to 43.20, 40.25 to 43.25, just to kind of cover that possible price swing of, or potential swing up to 43.09 range. Let's just do that. Let's be extra ultra weird. Let's do four. This is going to be today is going to be the strangest number I have ever placed up. The strangest number anybody has placed up. Today I will be the first to do this. I'm going to put 40.09, strange number, to 43.09. I don't think Eric's watching, so he didn't get to know. But John, I think John is watching, so he gets to know what my price prediction is first. But Eric does not. I will text Eric here in 3 minutes. Yeah, 71% dark pool trading yesterday. That's nutty. I mean, to me, that shows sheer desperation. It either shows massive amounts of whales investing into this, or sheer desperation on the part of hedge funds to try and mask the buying that's happening. Read this. This is posted by both Sale 4363. There's our 7 a.m. pokey. Which ended up being 146 in volume, 146,000. Yikes. 300,000. So it basically pushed us up to almost 300,000, not even 4. there might be a miracle chance that we hit 80 to 90. I'm almost thinking 70 to 90 today in volume. I'm gonna keep it at 80 to 100 because there's definitely a chance that today ends up being like that other previous day where just the beginning half is just slow. Uh, uh, Simply due to some of the increase in price that we're seeing in the pre-market tends to lead me to believe that the investors are coming, but they're not here until the market opens. The buy walls right now on the bid side are looking kind of hefty. We got a couple. We got 1,000 at 37.50, 3,000 at 37.45, another 7,000 at 37.07, 6,000 at 37, and 8,500 at 36.96. So there's buying pressure there, but they want to get in at lower rates. So I would highly suggest that we would see a level of a certain amount of decrease in price right off the get-go, followed by some strong buying support. I mean, the numbers are just going up higher and higher. It looks like people are setting up limit buys. People are possibly institutions setting up limit buys at lower rates. So we could see this spike down to maybe as far as like $37 even, and then just taking off. Okay, so posted by Both Sale 4363 says, Dear Apes, yesterday I had a meltdown about the dark pool and the PFOF topics. In short, I made them out as no big deal. Have finally gotten the time to sit down and research. I have had a change of heart. In order for there to be transparency and equality in the market, dark pool and PFOF shenanigans need to be exposed. Not just for apes, not just for the squeeze, but for future investors. If investors don't have faith in the market, then they won't invest. Furthermore, there won't be much in terms of regulation, and our world will continue to devolve into a corrupt malignancy. That is all. Holding for all of you. Ape strong all day long. Yeah, the dark pools. I feel like there is a place for the dark pools, because I get that. I understand the whole idea behind um, massive volume and how it can affect the price. Um, so I feel like there is a place for it, but I really think that it needs to be uh, maybe as an example, there needs to be like a ratio, a ratio rule, meaning your total volume for the day that you've seen so far, only whatever that amount is, only 10% maybe can be of dark pools. I'm just throwing out random numbers, but it seems to me like 10% would be like a fair, maybe 10 or 15% would be like a fair number, maybe 20. I don't know. That would be for smarter people to figure out, but um, and if that means that they have to break up these larger orders into smaller groups of buys and sells throughout the day, fine. But I can tell you where this would be a good thing. If a hedge fund wanted to send more shares to the dark pools, uh, and there was a limit on how much volume they could put in there in contrast to the total volume that's been traded in the market, then that would ensure that in order for them to do that, they would have to ensure that there was more volume in the market in order to move those shares into the dark pools, or just not make the trades. And so I think that's kind of where we need to be heading, is force hedge funds to create more volume in order to justify putting those shares into the dark pools. It seems like a fair trade-off to me. John is in at 33.7 to 36.7, but don't. Oh, damn it! Sorry, I'm slow to read. Well, I can see how many viewers. We only have one viewer. I don't think Eric's watching. In fact, Eric's told me that he's not been able to be on watching lately because he's had some internet issues. So I wouldn't worry too much about him watching. Uh, Sorry, man. I'm pretty sure it's just you and me right now. I got one. It says one viewer, and I know you're watching. So he would have to go back. He would have to go back in time to see. Uh, he would have to go back to see what we had said in order to do that, and I would see it happen. And I don't think it's 7:05. I'll go ahead and text him now. Yeah, you should have put that first. You should have put that first in the note. Like, don't say this, but. Don't look over there. But if you look over there, I remember. I remember I had a friend that did that one time. I think this is like way long time ago when I was in high school, and we went to like a Taco Bell or something. We sat down to eat, and he goes, "Don't look to your left," or something. He's like, "Don't look to your left, but there's a really hot girl over there." And I'm like this. Right after he says it, even though he prefaced it with "Don't look to your left," but that, as soon as my brain heard the words "pretty girl," I instantly forgot about the first half of the sentence. Yeah. Back in the day, I was like a dog with fetching a ball. You go like this, and I'd be like, and not even though you may have not thrown the ball. We are up 1.5% for the day. The market as a whole. Let's check it out. Let's see how the market is doing. Okay. It looks like there is 2,070 advancers to 4,579 decliners in the market this morning. I thought I was waiting for it to update on my screen, but it doesn't look like it's changing really. So fractionally, the market is up according to these circles right here. I don't know what to call these things, indicators. The heat map is kind of a mixture, but this is saying that there's more decliners to advancers. I feel like this thing's just not updating. I don't know how long I want to just sit here watching this for, but oh well. We'll go back. Amazon is up ever so slightly, 0.36%. 3,500 is the number I'm looking for them to drop under. Still hasn't happened yet. Cinemark is slightly up on the market, 0.12%. Doge is back down underneath that 21 that it hit. I was surprised it hit 21. I really expected it to only go up to maybe 20 on the rebound at the very most, but it actually did. It did hit 21, but then it did have that drop, and I honestly think it'll drop again. Maybe another spike up to maybe 21, and then I think it'll drop back down into this channel. I don't think this is a breakout, really. I mean, it shows a breakout, but I don't think that it's a real one. GME, they're up 0.64% on the day. Nice little stair-stepping action there. Same for us. Nice little stair-stepping action going on right now. We are up 1.56% for the day. Congratulations to the missed column for scoring another score against 3 people who are now trying to figure out what the daily price is going to be. I gotta type John's numbers in here. I got some crazy numbers today, John. Crazy. I'll say mine just to be fair. 4009 to 4309. Crazy, crazy, crazy numbers. Don't ask me. It's based off of it is based off of a previous day closing that we had back on July 20th when it went up to as high as 4309 for a close. I'm just trying to cover my base on that 4309 on a rebound back up to that so I just kind of chose 4309. I really think that today will be the fight for 40. So I think that's kind of where I wanted to. I really wanted to align around 40. I probably should have done a spread on 40 to be more accurate, because it could that would have covered anything from 38.50 all the way up to 41.50. But after Eric puts in his, I could always decide to change since he's technically supposed to be the one that goes first today. So we shall see. Those massive orders that were in here are no longer showing up, but I don't know if that's because they're just too far down and I can't see them or what. Nope, they're not there anymore. That 10,000 limit order just disappeared. I think that the hedge funds have. I know that the hedge funds have, because when we watch the numbers reset, we know that there's a large portion of them hedging their bets on different values, and in order for them to be in the money for the week overall, they're gonna have to probably pick up those $40 strike prices options that they have. So at some point today, they're gonna have to let the price drop or rise to at least $40 to pick those up. Otherwise, they lose out. I mean, it's more money lost. In options, I have not seen. There's nothing that makes me believe that they have made money on options this week. unless okay, so if we want to talk about how they could make money, they could make money by dropping the price and not having to owe the people who do have options in the calls. But if you look at the calls over the puts, right, on our biggest support lines, like it's almost double. I know 35 is twice as 70. But I mean, okay, so it's not double, but it is a fair portion over uh, in options. And so, um, and since we know that these are hedge funds, because when they disappear, when they reset, we can see exactly who owns what, and a lot of that big portion of is theirs. So if they screw people out of making money on the calls, they also screw themselves. That'd be interesting to know, though. Can is it possible for a hedge fund to create an option that they owe themselves? Can they make can they create an option that they pay themselves to make it look like there's more um, that there's more options on the books to try and fake out investors to buy options at certain levels. You know what I'm saying? Like, let's say you wanted investors to spend money and not get it back. So you created a false list of options that were purchased um, that, if they expire, the only person you end up owing is yourself. And then as they increase those numbers, more investors jump in on the bait, so to speak. That's some weird noises outside. All right, let me change your numbers, John, to reflect what you gave me. If somebody's sleeping in, it's not just me, because Eric seems to be sleeping in too. We still haven't broken 4,000 in volume. 400,000. I don't think that I updated my chart. Um, it looks like we got down as low as 36.18 last night. I had started to go for new highs based off of the last high of 46.50, uh, and so the low that I saw was 37.15, but I'm actually going to change that, and I had started recording new highs, but I'm going to alter that and put in 36.18 now as the new low, which puts us down 22.2% on the last. I wrote this down. This is my new term, John. I got it written on the back of my hand. So check this out. SPF. Hedge funds use SPF to protect themselves, and SPF stands for synthetic price failure. And so those 20% rundowns that I always talk about are SPFs. That's them putting on their SPF. Yep, sunscreen. It's their SPF sunscreen. It's synthetic price failure, and it's an attempt to create paper hands. And so when we see these 20%ers, that's them putting on their sunscreen. So that's just, if you ever hear me talk about synthetic price failure, that's what I'm labeling it from here on out, and I'm marketing it and running with it. I wrote it down on the back of my hand, since SPF, synthetic price failure. Let me see here. I have yes, that is what I have. But below that 46.50, the next one is 36.18, and we hit that. It looks like last night. 36.18 was the low for the night over aftermarket hours last night. Correct. That is correct. So if you were going to be putting in new highs since 36, 18, it would have to be 38, where we're currently at right now. If that's the low. But 22% seems pretty par for I think what we've seen in the past. Eric says, let's go green. I don't know that he's watched, if he's come on or not yet. He's going 38 to 41. Yeah, he's centering in on what I would have centered in on, I think. So if you want to change yours now, that is within your right to do so. I think part of the reason that I make everybody go first on different days is because it gives you a chance to be able to decide, reevaluate what you want to put in based on what other people have put in. So he is going 38 to 41. Oh wow, 38 to 41 is what he's doing today. Because that's the same value he put in yesterday. Oh wow. All right, so John is at 33.7 to 36.7. Eric is 38 to 41, and I'm 40.09 to 43.09. Weird numbers. 36.7. So John is actually dropping his numbers by almost $1 from yesterday. Oh, that's not right. He's dropping it quite a bit more than $1. His low yesterday is almost $1 less than his low, or his low yesterday is almost $1 more than his high today. I said that wrong again. You know what I mean. It's another one of those. It's a day. 36.7 and 33.7. Okay, John is locked. Eric, I don't need to change because he's actually going with the same exact numbers that he had yesterday. And I need to change higher than I was yesterday. Okay. I did not realize I was going higher than I was yesterday. I guess I just didn't comprehend. Okay, so there is a gap between Eric and John, which we're currently trading in right now. So that there's a gap between 36.70 and 38. And then there's no gap between Eric and I because we overlap each other slightly. But I'm trying to cover all my bases with the price spread that I've got. I could potentially lose out on a fight for 40, and I know I'm risking that. I'm risking missing out on that fight for 40, which would be in here. Eric might win on that one. On that aspect, he could get me with a point because I'm missing that window. But I'm hedging my bets. Eric's noticing that I'm flip-flopping because I had gone for a down day the other day drastically. You know, my numbers make sense to me, but they're not really making sense to the fact that I'm not getting tally marks. So, but I am flip-flopping on days on bearish and bullish. Let's see. I am going to put myself as being bullish today. I think that's going to be pretty apparent. John is definitely going to be bearish. and Eric will remain to be seen at market open, but more than likely, if I had to guess, he'll probably end up being neutral. So we'll just leave him where he's at for now. Just kind of based off of where we're trending right now, that would be my guess as to where he's going to end up. But I could be wrong. We shall see. Yeah, I'm just texting Eric right now, telling him that you know, if the price does close between 36.70 and 38, that would be that would be our 8th tally for miss, giving the miss scores a significant lead over us. I mean, unless you do a combined total between us, where we have 12 to 7 right now. But I do know that some of those days are days where multiple points were handed out. There's at least 2 of those days in there. 12, 9. So like it could be more like 10 to 7. So you know, I'd say we're on a little bit better than 50-50 for somebody calling out a correct price. But considering the fact that we could have up to a 9-point spread on our information, I think that's okay. Looking at shares borrowed, we had another big chunk borrowed again. So it went from 950,000 to 10, to back up to 250, down to 200, down to 45,000, and back up to 500. So there's a lot of borrowing going on right now. Not a whole lot in the ETFs. That looks kind of sort of untouched for the most part. I want to throw this up over here because this is the indicator that I like looking at so much. On loan average age per day. So in the past history, we see those big drops, and then it usually kind of tends to trend up. Now this is an instance right here where after it made the drop, it didn't really trend up. It kind of trended down a little bit, and then kind of steadily rose back up again. This point here dropped and kind of it had a couple of spike ups, but for the most part just kind of trended evenly and then started trending up. This one went down and definitely went up. This one went down and definitely went up. This one went down, went up. This one went down and went up. But now it's just sort of kind of leveling off again. So it's an interesting, kind of an interesting point in time that we're at right now with those with this indicator. It is down ever so slightly from yesterday, from 39.3 to 38.41. So that's the amount of days that those FTDs are on loan for. So they are decreasing the amount of days that those are on loan. The last time that we started seeing those failure to delivers, if I put them back up on here, would have been in this, probably would have been in this time zone, right around in this kind of rise up in age right here. So they know that they need to keep the age of the loans down, right? Because the longer that those failure delivers are out there, the more money they end up having to pay, number one, and number two, they start going onto the reg show list. The longer those failure delivers are past their due dates, so they need to keep that. They need to keep that on loan average age per day down. And it's starting to level off, which is in their favor, probably a good thing, because they can probably maintain as long as this doesn't continue to rise. But in the past, when we've seen that, when they've tried to maintain, it just slowly starts to incrementally go up and up and up, and they can't really seem to help it very much, which probably has to do with so if you want to look at the option market and the stock market, the actual shares being traded as two different entities, they're fighting two different battles, right? Because they're separate from each other. They can impact each other, but they're separate. And so as they're fighting, the failure to delivers should be coming from the options sector. The shares that they use to ladder attack are not the same thing as these failure to delivers are coming from. But as the failure to delivers come, they have to actually go out and find shares to get off of this market over here, which will cause the price to increase, because if they're buying shares to cover their failure to delivers over in this portion over here, then they're allowing the price to rise to get those failure to delivers covered. So it's this game where they want to borrow those shares from this portion over here at lower rates. So when they do go to buy, or they want to drive the price down so they can borrow those shares at lower rates, and also when that raises the price, it doesn't impact them into negative areas where there's people that get FOMO and come in and start buying a whole bunch. So they're playing this constant game of trying to keep their failure delivers down, and also trying to keep the price down while covering for those failure to delivers. Hopefully I explained that pretty well. So if they keep the failure to delivers at bay and are able to drive the price down, that's ideal for them. But as more people buy into the market, they struggle. But I definitely think that the price hike that we saw, what day was that? Would have been the July 20th. The price hike that we saw there was due to this drop, these failure to delivers that they covered for. I felt like we should have seen a much larger increase in price. But due to the fact that the price dropped so much beforehand, that they were able to get the price down so much, it could have impacted how much the price rose by, because they were able to get those shares at a lower cost due to paper hands that were selling possibly during this period of time where it was declining. Now everybody keeps talking about a parabolic signal that is forming. Well, the cost to them dropping the price while simultaneously then later buying shares to replenish or to cover those failure to delivers is causing this parabolic pattern, and in the end could be a signal for institutional investors to buy, which is going to create a lot of pressure on them to keep that price down, which is possibly why we're seeing huge amounts of dark pool trading occurring. right? So if we go back over here and we look at our percentages in dark pools, they're ever increasing from 66.6. If you go back to the 20th, right, it goes from 66.9 on the 19th to 67, 67.1, now 71%. And this could all be, and this is one of the things I had said was institutional institutions could be coming in and purchasing large orders, and that's why we're seeing this number go up due to the indicators that they're seeing, uh, that parabolic signal, and so they may end up struggling to keep this price down as a result. Um, it could be an explosion in price here soon. Who knows when, but definitely could be an explosion in price. A perfect storm, so to speak. $741. We have 516,000 in volume. The volume does appear to be slightly increasing as time goes on. You can see it looks, here's kind of like a hump. Here's another hump up, so it's kind of getting stair-stepping volumes larger and larger, almost as if we're building into the day. Wow. Hashtag dark pool abuse has been removed from all Twitter trending lists. Apparently there was an attempt, or it was gaining ground on becoming the #1 hashtag, and so I guess apparently it was trending in the UK this morning with nearly 100,000 tweets. Not there now. It was removed. Boy, I think I am out of my coffee drink this morning, and it's feeling like it's another coffee. I only try to have one a day. It is feeling rough. Possibly a pennant forming. So we had a little run up from $36.93 to $38. So like $1.10 raise, $1.10 raise, $1.10 rise in price. Let's draw a pennant and see what we get. Let's see what time, or about what time, this should break out. And I've decided that I'm going to start drawing little rectangles over the areas where I think the breakouts should occur. So right about at the right about there somewhere, possibly, maybe sooner. Oh no, wait, I forgot about you have to account for time. So 7:18 to almost an hour flagpole. So it should be an hour the other direction. So 8:06 to 9:06. So I gotta move this box. Oops, I gotta move this box over. It should be in this window in here. We can make it a little bit tighter. So I would expect this price to consolidate up to about this box window here and break out one direction or the other. This is a bullish flag, so it should break out going upwards. So let's do this. I love this post. I read this earlier this morning when I got up, hit the restroom. Always kind of check Reddit while I'm in the restroom, right? Who doesn't? And I read this and I was like, I should post this morning and just talk about it. Uh, I'm gonna read the title first because normally I say who posts it first, but I'm gonna read the title first. I don't know if I want to give credit to this person. Just need to state the obvious here. The majority of YouTubers just regurgitate top posts on this RMC stock and R super stock and put it in the video. It's like using copy and paste for your final paper and taking all the credit for another person's research. Why people donate hundreds of $1,000s to them instead of buying shares is beyond me, and hardly if hardly if ever do I see them give credit to the Reddit DD or the Redditor for the discovery. Any who rant over buy and hold simple. Um, yeah, I mean, I do definitely go to Reddit, check stuff out, but every time I read one of these posts, I always start it off with saying who the person is. For the most part, I want to say most of the YouTubers that I see do the same if they're taking it from someplace on Reddit. I am curious about this person. I want to see their posts and see like this amazing DD that they're putting forward that um, is just so useful that we're not giving them credit for. Oh, look at this. Petition to increase post karma. Hot Ape Summer. Posted on 2 different platforms. He posted it twice. Oh, look. Wait. It's a meme. They made a meme. MSM hedge funds have already covered their AMC short position months ago. Apes, did they really say covered? And then laughing. Oh, yeah. I don't see any amazing DD by this person that would have been stolen. I don't know why they're so. They're posting some Ortex data. Um, I don't copy that from anybody. I subscribe to it. I don't know. Yeah, I think most Redditors pretty much give people credit for their work on wherever they're pulling it from. I can't say that I see YouTubers just blatantly stealing like that, and I can't see why this person would be so uh, jilted by this. But anyways, that's Shoeless Rocket Man, giving him credit for his calling out of YouTubers who don't say anything about his amazing DD. So many people looking for credit. They're not happy that their work is being stolen. This is a community. Welcome to the community. We do this for free. I do it for free. I'm not getting paid shit. I think it's more important to be informed and inform others as to what's going on. If I get paid for this eventually, great, awesome, but I'm not counting on anything. Okay, so we are consolidating ever more on this pennant. Moving down to, you know what, my other line didn't quite intersect. So it looks like we're getting closer and closer to the top line here. which means we'll break out down. That's how it always does the opposite of what you think it's going to do. Just making it pretty. Purdy. My eyes are still getting adjusted to getting going. I need to go check on my son real quick. I will be right back. Just got to make sure he's awake for the day. Okay. He's doing a little bit of what I did this morning, sleeping in. I'm going to have to take off a little bit later to drive him somewhere. And I'll actually probably have to end the stream early today. I have another doctor's appointment that I got to hit up. Looks like we're going to break out just a little bit earlier than what I had thought. It's a possibility here, impending breakout. was. Okay, so there was a new SEC filing that was released. Gosh darn, I was so close on that box. I should have just extended it just a little bit further. One more candlestick and it would have been fully broken out. The new filing is called NSCC 2021-010. I had been watching Charlie's vids. He's somebody I've been recommending in the past. He's got Amazing DD, and he was covering it late last night and talking about some of the stuff that he was going over. But it's a 369 page, nice report that that in like the first like 7 or 8 pages, he said he already had found some amazing stuff in there about what was going to happen. But this post is by bchild780, and they're tweeting, or they're saying that PB Jelly Games, I have no idea who that is, tweeted NSCC 2021-010. This will be the big thread, and more will be added due to it being a 369-page legal document, so bear with me. Initial brief is this, though. NSCC wants to protect the market from crash in the event of fire sales resulting from hedge fund forced buybacks from shorts. May know MOAS is imminent. The thing that Charlie was talking about was that out of all of the SEC documents that's been released that we've been following to, in hopes that it would change things, was this is the very first one that talks about naked shorting, talks about failure to delivers, and talks about I think basically dark pools trading like almost all in the same sentence. Actually, it all was in the same sentence, and it was pretty big. In fact, we should watch that really quick just because it's kind of cool to see what he put together. We'll go to my history. Let's just go to his channel. So we did break out, the first candlestick that was completely broken out was inside, just inside my box. I should have drawn the box just a tad bit wider, but I was trying to get it as close as possible. But yeah, the very first candlestick to drive outside the wedge was inside my box, so I got it pretty close. So we're breaking out up like we're supposed to. And I'm just going to kind of keep it there. I'm going to keep the box there until we see, I kind of want to see how far this breakout goes. I'd like to see the day start above 38 if possible. That would be a really nice, a nice start to the day. So let's watch. I think this is the video. So let's watch this over here.
I just can't with this filing. It's 369 giggity pages long, and I'm already too jacked on page 4 that I feel like I have to make another video. And I apologize about this, by the way. I'll make this one very quick. NSCC 2021-803 advance notice to NSCC 2021-010. Both came out at the same time. I figured they would, as we saw DTC 014 come out earlier this afternoon. Now, again, this brings up the SFT, or the Securities Financing Transaction Clearing Service. So 3 or 4 pages in, it's already hitting me what they're trying to do. Let's go ahead and take a look at the purpose real quick. Now, this is weird too, by the way. No contact info, never seen that. So again, I've covered over 100 filings this year. It's the only one I've seen with language that we're about to look at. So before we get there, let's look at the purpose. There's 4 major things. Number 1, they're looking to establish new membership categories and requirements for sponsoring members and sponsored members, whereby existing members would be permitted to sponsor certain institutional firms into membership. Number 2, establish a new membership category and requirements for agent clearing members, whereby existing members would be permitted to submit on behalf of their customers transactions to NSCC for novation. Number 3, establish the SFT clearing service to make central clearing available at NSCC for SFTs. And lastly, make other amendments and clarifications to the rules. Now take a look at this. NSCC is proposing to introduce central clearing for SFTs, which are, broadly speaking, securities lending transactions where parties exchange equity securities against cash and simultaneously agree to exchange the same securities in cash, plus or minus a rate payment on a future date. In particular, the proposed SFT clearing service would expand central clearing at NSCC to include SFTs with a 1 business day term, i.e. overnight SFTs like what we see in the repo market, in eligible equity securities that are entered into by members, institutional.
Okay, I'm going to pause it right there. You're probably wondering what an SFT is. I know I was. I'm going online right now to try and check exactly what it is. I wondered this last night because I hadn't heard the term SFT before. The first thing that I could find right now on the internet is a European Commission. So I would imagine that this is probably along the same lines as what they have in Europe. So just reading what it says, it's called a securities financing transaction. It says EU regulation increasing the transparency of securities financing markets so that they can be monitored and the risks identified. Security finance transactions allow investors and firms to use assets such as shares or bonds they own to secure funding for their activities. A securities financing transaction can be a repurchase transaction, which is selling a security and agreeing to repurchase it in the future for the original sum of money plus a return for the use of that money, or lending a security for a fee in return for a guarantee in the form of financial instruments or cash given by the borrower, or a buy-sell-back transaction or sell-back transaction, or a margin lending transaction. So this is probably what we're moving towards, and I think Charlie's going to discuss that in the video, as I recall. But it sounds like what they're putting together, or what the SEC is putting together, is essentially a clearinghouse for SFTs, maybe kind of moving away from or legitimizing dark pool trades, in the sense that they will have better monitoring and ability to track what's going on with or outside of the market.
Firms that are sponsored into the NSCC by a sponsoring member, as defined below, or agent clearing members, as defined below, on behalf of customers, also as defined below, as applicable. This is where it gets interesting. SFTs involve the owner of securities, typically a registered investment company, pension plan, sovereign wealth fund, or another institutional firm. Transferring those securities temporarily to a borrower, typically a hedge fund, you know what they're saying, right? You know where they're going with this, right? SFTs are often facilitated and intermediated by broker dealers and agent lenders, i.e. custodial banks or other institutions that lend out securities as agent on behalf of institutional firms. In return for the lent securities, the borrower transfers collateral, and a net rate payment is typically transferred to either the lender or the borrower that reflects the liquidity of the lent securities, as well as interest on any collateral. Now, NSCC understands that SFTs provide liquidity to markets and facilitates the ability of market participants to make delivery on short sales and thereby avoid failure to delivers. Naked shorting and similar situations. Did we just get a filing with the words liquidity, delivery of short sales, failure to deliver, and naked shorts in the same sentence? What? On a typical business day, the DTC, an NSCC affiliate, processes deliver orders related to securities lending transactions on securities having a value of approximately $150 billion.
Daily.
That's a typical business day. Oh, this filing's badass. This is as far as I've gotten, but as you can see, I've again over 100 filings so far this year, and we have naked shorts, short sale, and failure to deliver is brought up in the same sentence, all surrounding securities lending. So what are they doing? They're going to be implementing a legitimate securities lending service that will prevent these broker dealers from naked shorting the living shit out of all of our shares over and over again, because now we have SFTs. So, hey, that's a step in the right direction in my book. Again, page 4 out of 369. But it's already becoming very clear what they want to do. I imagine most of this is going to be jargon and technical changes, but major stuff here. Major.
Cool. Me likey. Me likey. Let's move to that. I'm all for it. If we can get, I think if we can get the brokers more monitored, that'll be better for our market. And having an actual platform to where it can be monitored and controlled through SEC would be, or DTC rather, would be much better or ideal. Okay, so we've officially broke out of the pennant the way that we were supposed to, quite nicely right through the middle of my box there, and then it conveniently just wrapped around my box. I was hoping for a little bit more of a push towards breaking above $38 for opening today, but the fact that it hasn't is not terrible. If we continue to go back up and test this $38 range up here, you could see a bullish triangle forming, which would be something that would look very similar to possibly something like this. So I'll keep that in there. Let's see. If this does form, and I might have to move this down a little bit just because it doesn't really fit in completely. a breakout of this would probably be around there. But you know, with market open, and this is a bullish trend, so it should break out going up. But again, that's a should. Look at the VWAP crawling up this line. I didn't even notice that until after I'd made the line. Just crawling up that line there. Of course, this VWAP will actually reset, I think, once the market opens. Looks like I'm gonna have to put Eric down for being bullish and not neutral. John's the odd man out today. I feel like normally it's me. So let's see if this holds true. The lowest it should go, you know, is somewhere around 37.58. Wow, that's so weird that I drew. I looked that up, and then sure enough, I look over here and 37.58. There's 5,528 shares sitting there. 37.58 was right here on the line. I was just kind of trying to draw out like over time where would it fall, you know, in a couple more minutes. And the point it would test would be 37.58, and then sure enough, 37.58. There it is, right there, wall. And this is starting to get too easy. A significant amount of shares brought back this morning. So we went from 45,000 to 500,000, and then finally up to 1.1 million shares back available to borrow. Something going on. Currently, there is 1.7 million shares borrowed. That's almost as many as they borrowed all day yesterday. So that's updated. They returned 100 shares and borrowed 1.7 million. Short share interest is at 14.78. volume starting to pick up. You can definitely see a rise kind of starting to form right there. Things are starting to cook. You can hear the grease crackling. You know, I fully suspect as I was drawing this box out, I was thinking to myself like, well, you know for damn sure it's gonna trend outside of this this pattern on market open almost indefinitely. Like, I mean, you can't, with the amount of volatility that we'd normally have at market open, that's just gonna skyrocket one direction or the other. I'll be right back. I've got to do something real quick. Back in the nick of time. Oh boy, let's see. I gotta rush. Rush. If I screw up the beginning today, I apologize. It looks like I'll be fine. Alright guys, enjoy the morning launch, and see you on the other side.
T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, start, 2, 1, boost ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond. Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
You have a good forward link now in SM.
Okay, you sound good.
Discovery Houston, negative return.
Copy, negative return.
Good morning, apes. Welcome to AMC and ADD, where we buy, hold, and screw the hedgy. We are currently struggling to try and keep this back in. We did we did briefly break out of that bullish triangle that I had set, and obviously didn't make it into that box just due to the normal market conditions during the morning. But almost immediately after breaking out of that box, we drove right back up, or back down rather. I was seriously contemplating changing the music mid-course, but I didn't. Struggling to fight 37, trying to keep it in there. The amount of shares borrowed as of right now is at 2.1 million shares borrowed for the day. Options probably have not changed much. I would not expect them to have changed. Nope, they haven't changed. And it is reaching down into John's upper limit of his target goal or target price for the day, ending price for the day. It is moving into the $36 range. Strong level of support at 36.15. Looks like the market might be down for the day. We have 34 inflow versus 42 inflow or outflow. The market as a whole, we'll check it on it here in just a minute. Let's see if they break past this 36.15 level. Punched right past it. Driving it ever further down. The put options, the lowest they had it at was 35. So I wouldn't expect to drop too much further than 35 just based off of options alone. And if they did, then we should be seeing options in favor of dropping the price lower. And I'm not seeing that yet. I see some options there, but nothing massively. So if they wanted to make money off of their puts, now would be the time to call it quits on the pressure, collect their money on the puts for the day so that they get their money, unless they feel like there's enough strength there to be able to continue to drive the price down, which is always a good thing in their favor. But at the same time, they don't want investors to feel that there's a good buying point. If they hit that mark, then they could see a reversal, a huge reversal against their favor. RSI on the 30-minute interval is currently at 37.44. On the 5-minute interval, it is at 28.96, which is kind of low. Here comes the reversal. Let's look at the market as a whole, because I have a feeling we're going to see a lot more decliners than advancers, but I was wrong. The advancers have picked up pace. There's 3,472 advancers to 3,155, so it's just slightly breaking, almost even, but just slightly breaking past even. Okay, so it looks like it's going to go test. It looks like it may go test $36 for a second time. And I'll check the options again just to see if those have changed much. Okay, they have. Oh, no, wait. No, they haven't. 82878, yeah. Sorry, they have not changed. One thing that we were noticing from yesterday was that the options changed around the same, or Duncan was thinking that the options may have changed at a certain time, and that they may change every time during certain periods of the day. And I think that time would have been probably around right around now. So we'll take a look at that and see if the options change. He thinks there may be a correlation to time and when the options change. 9 o'clock-ish being the window. I have to step away for a little bit here. I have to go drive my sons to school real quick, and I will be back. It takes me about 30 minutes. We'll probably leave in about 5 minutes from now. So I'll be back at like 9:15. So we could be forming a nice cup formation right now. If it drove back up to say $38 and then kind of spiked down just a tad bit and then back up again, it could be a nice cup and handle. Maybe a little something like this. Oh, dang it. I hit the wrong button. That's something to watch out for. Short share interest is at 14.84. It's getting closer to that 15%. If we do continue to drive the price up, we should see a lot more shares starting to get borrowed. Currently, they're at 2.2 million shares borrowed. That's only up 0.1 since I last looked at it. Options. Have not changed. Those might change while I'm gone. inflow versus outflow, 86 to 93. GME just started going green for the day. They're also forming a nice cup. We are down still, ever so slightly, but increasing and going down. Okay, guys, I'm heading out. I will be back in about a half hour. I'll put that in the notes. I don't see anything that's jumping out at me right now in regards to changes in options or shares lent, and actually Duncan might be onto something. The options just did reset. All of the options, and that's at 8:45 in the morning. I'm going to write that down. Huge reset across the board. If you want to see what it looks like without all of the options by the hedge funds in there, now would be the time to look at it. So I'm going to put reset time 8:45 CST question mark, and we'll start tracking that from now on. Changes could be made every day. It really shows you how many people have options available out there that are not part of the hedge funds. And interestingly enough, at the $41 put price, there's actually like 4,000 still there. So that's interesting. So I will come back and I will compare notes to what we had from earlier. But yeah, there's, check those options out. There's some interesting numbers there. All right, guys, see you back in a little bit. Okay, I am back a little bit earlier than I thought. Let's see what we have going here. Never got that cup and handle formation that I wanted. We were going to take a look at options. I'll go ahead and pull options back over. You know, they disappeared. It was right about 8:45 Central Standard Time or 9:45 Eastern Standard Time. And if you want to see what a natural options page would look like without hedge funds involved, there's a lot of puts against AMC at 41, which are making money right now, especially since we're down at 35.61. As well as options in the call, like the natural calls. Looks like the most of them are set up at 57.50. There's a bunch at 57.50. So let's refresh this and see where it's kind of see where the hedge funds are kind of resetting for the day. Okay, the biggest grouping right now is for $36. That has changed from $38 down to $36. They had 35.8 thousand options at 38, and they hit those, reset, and they are now going for $36. And they currently have 8.8 thousand options. On the call side, it's dropped from 40 to 38. So they have 56.1 that were out of the money. Reset that to 38, so we could be looking at a closing today somewhere between 36 and 38. 38 is heavy at 9.1. So slightly heavier on the 38 side than the 36 side of the options. And I am tracking for Duncan the I'm going to go ahead and track for him those times, just because those could be relevant. Yeah, so interesting stuff going on there in the options. Shares available to borrow currently at 1 million, so they've actually returned quite a bit more since earlier this morning. It doesn't look like they're putting up, it makes it look like they're not going to be putting up much of a fight from here on out. Either they're able to lower the price off of sheer volume being low, which is currently at 23, almost 24 million in 45 minutes. These candlesticks in here are running at about 210, so low. I shouldn't call them candlesticks, I should call them columns. Actually, but volume's picking up though. It's actually not that bad. Volume's actually doing pretty decent. Yeah, if we continue to keep volume up like this, that's actually pretty decent. How low did we get here? 35.11. Okay, so I'm gonna go ahead and delete. Okay, so our price drop is now at 24.5% from the previous time. The previous high of 46.50. Excuse me. So between the last time when we were at 31.15, driving all the way up to 46.50, and then dropping back down, we're almost completely recovered on the. I shouldn't say recovered. We're almost completely back to where we were at. 34.87. So that's 25% down from the previous high of 46.50. I would say that this drop in price is a little bit more, what's the word I'm looking for? A little bit more than what I would consider to be a standard synthetic price failure induced by the hedge funds. So there is some paper hand going on right now. Probably about 4 or 5% of it, probably. Just kind of guesstimating. But you know, they're testing the waters. They're trying to see how many shares they can get back on the market again. So let me just do some checking into something real quick here. I'm going to check Fidelity and see how that's affecting our buy to sell order ratio. I believe yesterday ended at 56.44 on the buy sell ratio. Oh, I forgot to log in. Okay, so for the first time in a while, AMC is no longer on the top of the list for most heavily traded shares, or most heavily traded stock. Snap, I have no idea what that is. Communication services of some sorts. Let's see what that is, just out of curiosity. Snap is moving up into what is that? Snap. Snap stock rockets after huge earnings beat as revenue. Oh, Snapchat. There you go. You want your next pump and dump. That's it. Looks like it's up on the market today, 21.35%. Watch for that to go down. Anyways, AMC it currently has 69% buys over 31% sells. I'll be right back. I gotta hit the restroom real quick. Coffee's starting to kick in. Okay, I'm back. While I was away, I was fielding a message from one of the two people that I had reached out to in regards to some of their DD. Um, and I'm only going to release the. Yeah, actually, I'm not going to say anything about names or anything like that, but I'm excited that they reached back out to me, said that they'd be willing to possibly do an interview and just kind of talk about some of the DD that they have. I won't post anything at this time. I know I've on previous shows I've shown some of their information, but it'd be really exciting to have them on here and to talk about what it is that they have to say. They have some good information out there. So you know we'll see what comes of that. Currently, the amount of shares borrowed is still kind of roughly sitting about the same at 1 million. No new changes there. Let me refresh this real quick. Looks like they have added over the morning some shares back to the ETFs. Looks like they did borrow about 100,000 more here at one point, but let's check out Ortex and see how that compares to what we're getting on Ortex. Ortex is stating that there's 2.3 million shares borrowed currently. That is up 0.3. No, sorry, 0.1. I had 2.2 million from earlier, so that would correspond correctly with what I'm seeing. So yeah, more shares borrowed. Price currently at around $35. Let's see if we have any trends here. I definitely see a descending parallel channel forming. Let's see where that's going to take us. I do this so often. It's not even funny. I always want to draw these channels, and then it won't let me. It won't let me do anything up in this upper region here. So we have 3 touch points on that. I'm gonna kind of nullify the wick on the bottom side of one of these just to kind of get this drawn in here. So we have 3 touch points on the top, 2 touch points on the bottom, with our low of the day at 34.87. We hit this level of resistance at 36.15 plus the channel resistance all at the same point and start trending back down. We'll check out the options. Do remember that they reset. We watched them reset at 8:45 Central Standard Time today. We'll go ahead and refresh that and see if that's the case. We'll see where they're kind of building the strength, the line of support at. $36 still for the puts. I will drag this back over. Okay, so we got our puts at 8.8, and it's strengthened up to about. We'll just put 12.1. And at the $38 price for the calls, and it is 20 point. We'll just put 20.9. So again, it's definitely favoring heavier towards the $38 price point, almost a 2-to-1. There's also some heavy support for the $39 and $40 range, as well as there being support on the 35 point for the puts, 14.7 thousand options. Oh, hey, Weeble, where'd you go? Weevil wanted to disappear on me. Okay, so I have 34.69 as a new low. So we're currently on a negative 25.4% drop from 46.50, which is definitely more than the usual 20%ish, 20 to 22% that we might see on a drop. So we've got some selling going on. That's probably non-related to hedge funds just trying to short ladder attack the stock. However, though, the movement for this morning is definitely short ladder ish looking. It looks like we're starting to kind of trend back upwards. We might test for a fourth time that channel. We'll see where it moves to here. If we do drive through the channel, we're going to be wanting to break that $36.15 level of resistance. And I'm probably going to draw up some new Fibonacci retracements here in a bit. So if you want to learn how to draw Fibonacci retracements, that'll come up here shortly. Duncan, welcome. Oh. So we kind of tested that channel for a fourth time. Hopefully lucky number 4 will break through. We're at 33.7 million volume at an hour and 10 minutes into trading. We are down 5.3% with GME only down 1.83%. How do our charts compare? There are some similarities. Definitely some similarities. Doge taking more of a hit. This does look like a pennant forming. But pennants are supposed to break out going up, but look at this pennant here. Pennant down. Pennant down. I wouldn't expect anything different than the usual. This is just a pump and dump, guys. Be careful of cryptocurrency. Be extremely careful. Okay, so we're trending like right in the middle of the price prediction for John for the day today. Let's see what we're getting on Twitter right now. I'm going to pull it up on my phone. It's a little easier for me to see new information on my phone. Exciting things to talk about. Monday, I am going to completely discuss our voting options, our voting proposals. Gonna, I have a document that I'm going to post to Reddit, as well as information about what we have to look forward to on the voting. Votes have to be in by the 28th So that would be Wednesday. I believe you have until midnight on the 28th Eastern Standard Time, I believe, to submit those votes. So for those who can vote, 26th, 27th are good days to vote on. But we'll cover a few things on there, what I've experienced from the last vote that they had, things to watch out for. And let's see what we got going, what we have trending on Twitter. They're saying on Ortex that the second half of June's data is out, but I didn't see that this morning. So did they update it? I'm not seeing it. Oh, that was posted 7:15. Okay, they're just talking about what was updated down here at the bottom. I don't understand why. Oh, I haven't been on my phone for a while. I gotta scroll way up. Okay, here we go. Okay, so Charles Payne, he tweeted something out 20 hours ago, so that would have been for yesterday. My goodness, people just tweet so much. I don't even have very many people that I follow, but there's just absolutely gobs stoppers of information. I'm just going to go to the very top and then scroll down. Who's Gabe Griffin? Charles Payne. I'm delving into the world of dark pool abuse with volume Princess. And it looks like Charles is going to be talking about that today on his show. Testing that channel for the 5th time. But he said social media stocks set to soar. China's war on American investment rocks another sector. Stocks to own amid higher volatility. Making money. Foxbiz TPM. Tune in. I wish I knew where to pick up his show at. I would like to see his show at 2. and then Stephanie Cameraman, who I believe is the lady that TMI. Yeah, it is. It's the lady that TMI interviewed. She has a book out on dark pools. She says, I will be exposing the dark pools tomorrow. Catch me live on Fox Business News with Charles Payne, 2 to 3 p.m. So that maybe they're going to be talking about that today. This is just a random person. Beth at BusyBJ17 on Twitter said, when 73% of a stock's trades are made in dark pools, the concept of a free market becomes a joke. When 2.5 times the flow of stock is traded in dark pools in one day, I call bullshit. Wall Street is effing the retail investor, and the government is in on it. The frustration is there. For sure, we have a lot of people who are really frustrated with these dark pools, trading especially at 71% from yesterday. It's happening. It's supposed to be there for a reason. I doubt that reason is being used correctly. But I don't think there are rules in place that I've seen personally in writing that allows them to do the trading that they do in the dark pools. I think that they may be bending the rules slightly, and they may end up getting fined for it eventually. But I don't think that will stop it from happening. Let's look at the options again real quick. See where they're kind of heading. So we saw the reset at 8:45 Central Standard Time. The options are starting to trend a little more heavily at the $35 range now instead of the 36. So originally I had 36 down at 12.1. That did increase, but the 35 range is actually picking up more. So we'll go ahead and change that spread to a 35 and 17.4. And this is a repositioning of the options by hedge funds. Still supporting $38 on the call side with 22.1, so that's up from 20.9. And we'll just continue to monitor these options as they happen or occur for the day. We do have that $45 call options. Oh my goodness. Oh wait, I'm sorry, I'm looking at the wrong column. Yeah, it's $38. I started to look at the wrong column again. Close runner-ups though at 39 and 40. So our spread is 35 to 38 for the day. Since this is the last day on the options, we could see. I would suggest that there would probably be a closing price somewhere between there, 35 and 38. If you're just joining the show for the day today and you're looking at some of the lines that I've got going on the page today, I had a descending parallel channel set up that was looking pretty good. It was trending well within that, and it looks like we had a slight breakout after testing the upper limit of that channel 5 times. 1, 2, 3, 4, 5th time it finally made it out of that channel, but it's just kind of parallel consolidation from that point. So we'll see where it goes from here. This is a bullish flag, so we should see this tend to go up. I would think that it might test 36.15 on this Fibonacci retracement, and we'll see whether or not it hits and pushes through, or if it just hits it and bounces off of it. But I'll go ahead and leave the channel up for now. The blue lines that I've got on the page, blue, purple, and orange lines, are color coded to the names that are showing up on the screen. Those are price predictions that are put in place by 3 people: myself, Casey, Eric, and John. 2 other guys who also own the stock, and we just on a daily basis we kind of put in our guesstimates at 7 o'clock Central Standard Time, what we think the price is going to close at for the day, and it's just for fun, just to see how close we can come to getting it right on within like a $3. We basically give ourselves a $3 margin, and right now the big wiener is John. John is in the lead. Actually, I should say the missed column is in the lead right now. We have completely missed it 7 times in the last 3 weeks that we've been tracking it. Eric's only been doing it for 2 weeks. John and I have been doing it for the whole 3 weeks. And Eric's managed to make a huge comeback. So I would have to say that Eric's probably got the best ratio of guessing, even though he's only got 4 in 2 weeks' time. However, between the 3 of us, we've hit the price a significant amount of times over the missed column. But John is in the lead right now with five tally marks so far. Volume is currently at 36.2 million at 9:54 Eastern Standard Time. So basically, 2.5 hours into trading, we are at 36 million volume. I had kind of predicted somewhere between 80 and 100 million shares traded for the day, so we might be trending a little bit ahead of that. The pre-market hours were really kind of barren today, and it made it very difficult to kind of figure out where we were going. But I can tell you right now that volume is starting to drop off a little bit, and a lot of these columns of volume here are trending below 250,000, which we want to see it above 250,000 shares a minute. That really does put us on a good pace for the day. And if you look at the trend, you see it dropping off. Not significantly, but it is dropping. It is trending down for the day, and of course, as we've stated many times on this channel, as volume drops, it becomes easier for the hedge funds to manipulate the price. Actually, it goes both ways. It can be driven up really quickly, and it can be lowered very quickly. In fact, this morning was a good example of the price being manipulated upwards due to low volume. If I zoom in on that, we had super low levels of volume this morning. I mean, look at the difference. Here's after the market opens, in contrast to what happened in the pre-market hours. And so if I just scroll enough to get that morning part out, you can kind of see how volume was so low. These candlesticks are averaging like 2,000 shares traded. Just really low amounts of volume. And for the first time in a while, we actually witnessed the price of the stock increasing over time with low volume. So I mean, typically we see the opposite of that. So that was really kind of fun to watch. Made me feel, if I had to guess, my price prediction today was probably on the high side because of that factor alone. That signaled to me that we were doing well in trading with low volume. Kind of was a signal for me to think that there was a chance that we could be closing a little bit higher than usual. So my price prediction came in. I'll list them all up here so you can see them. Mine came in at such an odd number today: 4009 to 4309. Eric was 38 to 41, and John's 33.7 to 36.7. So those are our predictions for the day, and we will see where that goes. We are breaking out for sure of that channel. We are heading back up to that 36.15 price point that I was talking about, that level of resistance. We'll see if we push through it. Short share interest is currently at 14.87% with 2.32 million shares borrowed on the day, which is just ever so slightly higher than it was. I had earlier, I recorded it at 2.3. So 20,000 shares borrowed since I last looked at it. Stonko tracker is not reporting anything crazy. 71% traded yesterday on the dark pools. It's just so crazy. So crazy. I wish there was a way that you could look at what those. You know what? I have this page here. Let me refresh this. Let me see if this shows us what the buy versus sell volume was. I wonder if that's in here. I think we need to change this. And this is probably yesterday's data. I mean today's data. I mean, 37 is saying 37 million volume traded. We are at 37, so that's accurate. Average on days range. Okay, that's all there. I haven't looked at this page too much, so I'm just trying to get an idea of what I'm looking at. Oh, dark pools. That's the page I want to be on. No wonder. All right, let's see. Okay. So this is correct. Our average volume. It doesn't say average compared to what, but 101 is definitely probably based off of the last week or so. If I had to guess, maybe 2 weeks. Which sounds about right. Okay, so I believe the net short volume is how much has been traded on the dark pools. I believe. So you would have to add this 13.3 million to the 37.4 to figure out. Basically, it's a 1-to-4 ratio. So maybe 25% traded on the dark pools this morning. I'm not positive. I'd have to try and figure that out and see how. I'll have to look at the day's positions and see how that turns out. Is there a way to look up specific dates? I don't see it. Sorry guys, I always forget to take off the tally marks when I'm looking at this kind of stuff. Yeah, I just wanted to take a look at this and see price versus short volume percentage. Hold on one second. I want to try to understand this short volume. So the short volume really increased a very large amount since late March. But okay, no, okay, that's the price. That's the price that increased. Okay, so this is price in the purple, and then the pink is short volume. So short volume is up this week. It's hard to, if I had to guess like a median, I'd probably draw the line like kind of like right here. So I'd say, is this today's or yesterday's? 722. That was yesterday's. Okay, so I'd say yesterday's volume was a little bit lower than usual and short. Yeah. Okay, so short volume versus total volume. Yeah, I'd like to try and make some sense of this page. I'm gonna have to look at this on my downtime and try and figure out how to read that page properly. Looks like we had a little. We never even made it up to the 36.15 before the price started dropping again. We'll continue to watch this and see if it, this could be a period of consolidation, or I might draw a triangle wedge out of this. It would end up being a bearish triangle wedge. As far as the order book goes, we've got a good wall, a good buy wall at 60 or 6. Boy, I can't talk today. It was at $35. It's since disappeared, but it was like 6,000 shares at $35. Smaller wall now up at 35.25. Inflow versus outflow is 326 to 341. And we've been trading for the most part under the VWAP since the start of the day. We did have one tick up that was kind of put us over the VWAP. I like to see us trading above that. Citadel is currently slightly busier than normal, ever so slightly. On Fintel, it looks like we have one new SEC filing, a 13F filing that occurred. I'll pull that up real quick. It looks like State of Jersey Common Pension Fund. I have seen this so much. My mom, hopefully she doesn't mind me announcing where she's from, but she lives in California. And one of the things that I saw, this is many months ago, but I saw a teacher's educational fund from California had invested into this stock. And the reason I'm saying this is because my grandmother, who's still alive, 90, I think she's 91 now, is a retired teacher. And one of the things that I thought was really interesting was Nancy Pelosi, one of the House representatives from California. Her husband had purchased into a portfolio that was heavily positioned into AMC, or made a position with AMC, which made coverage a while back. And I do believe that Nancy Pelosi probably through the grapevine had mentioned to the school board that they should probably look into owning some shares of AMC. And so I noticed that the school pension board for California bought into AMC. This was a while back. I don't have it up here on the screen, but anyways, State of New Jersey Common Pension Fund looks like they bought 229,643 shares. Let's find out. They filed that today. Let's find out when that was. Yep, another 630 days. So still getting releases on information from Fintel on from dates as old as 630. So we still haven't updated for the new month yet. I keep trying to add this up and it never adds out right. So let me just try it again. Okay, it actually added out right this time. So I just took the total value that they purchased the shares for, divided by the amount of shares, and got 56.67 as the price that they paid per share, or 56.68. It's close enough. You can round up to 68. So let's go back to the 30th and see if they got a good deal. 56.68. looks like they did get a good deal. And I actually have another screen that would probably pull this up. Oops, wrong one. Pull this up so much better and easier to look at. Back on the 30th, the market opened at 56. The high was 58.18, the low was 54.65, and the close was 56.68. So they bought those at the close. 56.68. Yep, they bought those at the close. 56.67. It's close enough to 68. Yeah, so at the close of the 30th, they bought, or either that it's a coincidence, but if I had to guess, they bought those at the end of the day. How many shares did I say they bought? 230-ish thousand. Close enough. And chalk that up to another buy. I hate how when I go back in the past like that, it forces me to drag to the current time. I purposely drug out to the 5-minute interval. I meant to go to 30. The 30-minute interval, our RSI is really low at 30.1. That's getting down there. You can see volume dropping off over the day. Looking at the 30-minute interval. On a 5-minute interval, our RSI is at 41.03. Again, a pretty kind of a low RSI, not really low. Yeah. If I set the range to, and welcome to the show, True Demon. It's awesome to have you here. Glad you're here. I set the range to, I guess if I set it to 1 day, does it put it back to where it's supposed to be instead of, I guess it does. I probably could have just set it to 1 day instead of setting it to 5. Yeah. I guess instead of messing with interval, I should just go back to 1 day instead of doing that whole click and drag crap. Inflow versus outflow. Where are we at right now? We are currently at 335 to 348 on the inflow versus outflow order in millions of dollars. Since you're here, I'll just kind of introduce you to the show a little bit and tell you some of the things that why I have certain things set up the way I have set up. I'm tracking Amazon right now. I feel like Amazon's kind of the heartbeat of America as far as goods. It enables me to kind of feel like how the market is doing. Also, Jeff Bezos stepping down as the CEO. They were trading at about $3,500 when that happened, I think 2 weeks ago. And so essentially, I just kind of have that up there. I don't have any shares of Amazon at all. It's just kind of a tracker since we do have that negative beta to the market. It's just something I kind of like to have on the page so I can kind of see how the market's doing in general. Of course, obviously, I can switch over to markets and check that. We are slightly advancing over declining. For some reason on my page, it always takes a few minutes. It takes a minute or so for this to update, but we'll wait for it here and see what happens. There we go. So advancers. So we're kind of moving in the negative direction on the market. There's now only 3,081 advancers to 3,314 decliners. Although the market bubbles themselves are showing positive gains as a whole. I would say right now we're kind of in a period of consolidation, but I'm about ready to draw a triangle here. Anyways, this I may update this. I don't know. We'll see. I'm gonna delete the descending parallel channel. I have Cinemark up on my ticker simply because they're our competitor. I think it's good to have an idea on how the movie industry is doing in general, just to kind of track uh, what should be happening to us. I think in general, unless Cinemark has any kind of specific um, news that would cause them to be doing better, then obviously they would be doing better or whatever. But that's the reason that I have them up there, just kind of as a competitor. Dogecoin, I feel like they've been a pump and dump for a long time. Cryptocurrency in general for hedge funds. We've been following this descending channel for quite a while that I had created, but we broke out of it just recently, and I had kind of suspected that we might hit about 20. But the reason that I watched this specifically is because I feel like eventually what's going to end up happening is, you know, it kind of correlates into and what we see for price drops on AMC. I think they get their money there, a lot of money there from pumping and dumping cryptocurrency. So I just kind of keep an eye on that. GME, we all know why we follow GME. Uh, some of the similarities are striking for a company that has nothing to do with the movie theaters whatsoever, and the fact that our patterns look so similar. It's just absolutely insane. Also, and I may have explained this while you were on here earlier, I don't know, but there's three of us who do price predictions every morning. We come on and we kind of tally up what we think is going to be price closings for the day. Um, and then we give ourselves a $3 spread, and then we kind of try to guesstimate where we're heading for the end of the day today, and then we put them up there based on everything that we're doing, and we get ourselves tallies at the end of the day based on whether or not we've got it, and there's actually a missed column for any cases where none of us get it right. And we've been tracking for 3 weeks now. John and I, Casey and John, have been tracking for 3 weeks, and Eric's been in it for 2 weeks. And we've missed 7 times completely. Complete airball 7 times over the last 3 weeks. There has been times where some of us have gotten points on the same day because we're overlapping. I think you'll notice Eric and I are overlapping today between $40.09 and $41. Obviously, since I have the least amount of tick marks in there, I've been all over the place on my guessing prices for the day. I've been trying to. Um, Sometimes I do weird things. I don't know. It's really for fun. It's more than anything. Uh, let's see. Good tickers. I follow quite a few meme stocks as well. I have a few others on my list that people aren't really paying attention to. DKNG, IDEX, BSQR, and my personal favorite SENS. Yeah, I've heard of a few of those. The SENS, I've definitely heard of that one before. I can't say actually. I don't know if I've heard of IDEX. Um, Not a bad price for IDEX. Look at that George W. Woo, that was nice. Interesting. Well, you know they need a lot of those over there in Indonesia. there's a pretty big market over there for them to be able to sell. The problem is energy, right? They probably suffer from. I would imagine energy is probably pretty costly for them over there. So I don't know if the motorcycles will be effective. Um, I think they would struggle at least in that. Let's look at some of the others here. BSQR. Yeah, India would be a huge market for them, for sure. That one's kind of a scary one though. I mean, it looks like the way it's setting up, it looks like, what do they trade? Hmm. Yeah, that's what I'm suspecting. You know, just from looking at it, I would, you know, kind of assume that it might be a squeeze play. Um, what's their total share, outstanding shares? Just out of curiosity, if you know. Oh, shoot. Holy moly. So they just dumped a bunch. So they had a bunch on loan and they dumped it. Short share interest is 13.3. I mean, if that doesn't look like our charts, I don't know what does. What's utilization at though? That's what I was curious about before. Utilization at 30. That's kind of low. Yeah, 37.3. I mean, it's riding the same kind of squeeze pattern that we're seeing ourselves. This is so the one reason that I had wanted to talk to you. I'm gonna pull it up on the side, um, real quick here. I just want to look at it on Reddit because this is you touched on something that I think is really important that a lot of people are kind of missing out on as an indicator. Why am I drawing a blank? Here we go. Let's get rid of this. There we go. Your posts. I want to show this to you since I've got you here watching, and this is really huge. This is so what triggered me into finding. Um, I'm reading what you're saying right now. So what really triggered me into what you had posted, it was the possible AMC RIP prediction trend analysis. I don't know if you know how accurate I think this chart is. This chart is absolutely dead spot on, and I'll show you in a much dumbed down version of what I don't know if you actually created this or not, but I'll show you what I've been on track with for a little bit here, and this is something that I had been tracking as well, and I'd been looking at the on loan average age per day, and one of the features that I had noticed is that it seemed like every time we seemed to have a drop on that indicator, we would tend to see volume kind of dip a little bit. Then we would see a price volume would start to increase, and then a spike in price. It didn't happen on this one. I'll tell you why in just a second. But on this indicator right here, and it's really hard to see that there was a price increase here. Volume tended to get a little bit lower. Volume increased, and the price increased. Again, that dipped. Volume decreased. Volume started to increase, and then you had a price rip. We had the dip. And volume was dipping, and then volume started to pick back up, and we did have a rip, but you know, as I went through all these dates here, I was adding up kind of like how long after these dips were we seeing the price increases, and they were somewhere between the range of 7 to 15 business days. And so, you know, I kind of had formulated an idea that once we hit the bottom of this, which when I drew the circle and made this map, I didn't realize it was right at the bottom. I kind of formulated an idea that 7 to 15 business days later, we would probably see some kind of price increase or price jump. And because of the amount of drop in this on loan average per days, basically to me, what this was an indication of was failure to delivers that were being covered. Somehow this drops before the price rips, which doesn't really make a whole lot of sense to me. And I'm not reading what you're saying right now, so hopefully. Okay, you said you created it. So let me tell you why we didn't see the price increase on this one. And this is just kind of what I formulated. I put together a little bit of another mapping. That same section is right here on that dip. Okay, so if I go back to the last page, you'll see it. It's right here. No price increase. It's kind of skewed over to the right a little bit, but that's the same dip right there. What ended up happening is in the red columns that I have here and the white columns are where AMC sold shares to the market, and the red columns are where Wanda sold their shares, converted their shares and sold them to the market as well. And if what you'll notice is right before that time frame, AMC dumped 72.3 million and Wanda dumped 13.5 million shares during that time frame, and I believe they used these shares to cover those failure to delivers, hence us not seeing a price increase during that period of time. Again, if you wanted to make that same comparison, Wanda sold about 13.8 million during this drop here, but we still ended up having a huge rip. But during that huge rip, we had AMC come in with 51.5 million shares sold to the market, and I think it kind of stifled our progress. And so we saw this parabolic, you know, everybody's calling this parabolic formation that's happening. But at the same time, we also saw the on loan average day indicator drop, and as it dropped, we hit that new low again, and no shares were added to the market. So we have what we're currently looking at. Where it came up, and the 15 days that I had, so I kind of did like a span on all these other ones, 7 to 15 business days. I believe the 15th business day ran out on Monday. It was either Friday or Monday. I can't recall off the top of my head. And then we ended up having the price increase on the 20th instead, which was actually Tuesday. So it was outside my window by like 1 or 2 days. Which I thought was kind of odd, but I really don't know how to explain that exactly. But we did see the price increase, but it wasn't nearly as much as I thought it should have been. So I'm not really sure what to make of all of this, but I do know that we're still continuing to see it. You think I'm spot on with the first 2 share sales, but the final share sale was compounded with a major FUD campaign from Mudrick. Okay. Yeah. So this is an indicator that I'm watching pretty heavily. I think it's something that we need to consider when we're looking at what's going on with this stock, for sure. Despite MC selling less than a single hour's worth of volume into the market and completing their at-the-money offering within 2 hours of market opening, the price collapsed on June 3rd and 4th was disproportionate. Yeah, so I honestly, with this big of a drop, the failure to delivers and the price increase that we saw back on the 20th of this month, I don't think is complete. I don't feel that it's complete at all. In fact, I think that there's more to come. And I think part of what we're seeing, if I had to guess, the fact that that we're seeing such huge dark pool percentages increasing day over day, I think somehow they're managing to put a lot of these. They're managing to buy shares to cover their failure to delivers, but they're throwing these into the dark pools so that uh, they don't impact the price. Okay, and I'm just reading what you said, and you're actually agreeing with what I just said. The 21 million total shares sold into the market on June 3rd should never have caused such a profound drop in price if the squeeze was triggered. Yep, and market makers redirecting buys to the dark pools allowed them to reduce positive price impact and cover failure to deliver. That's exactly what I'm thinking. I mean, look the massive amount. I mean, we were trending earlier this month at like low 60%, and now all of a sudden we're up in 71% um, of the total volume being traded in dark pools. Absolutely ridiculous. Um, so something's going on, and I'm not sure how to find the data, but I definitely I think we're barking up the right trees. Um, Yeah, I would love to talk to you in person. Hopefully you'd be willing to do that. Come on to the channel, we can just talk. But um, it's something that I think I've tried to put it out there a while back. I did post something on this data that I had posted before. I posted on Reddit. It didn't get a whole lot of traction. I'm trying to recall off of your post. Let's see, you had. Okay, you got decent traction. You got 1.2K upvotes on that, so that's good. And you got a lot of awards, which were so like, I mean, you deserved it. You totally deserve those awards. If I'm not mistaken, I may have awarded you on that as well. Um, okay, that's Discord's cool. I have it. That's completely fine. Not a problem. We can use Discord. Actually, we have a channel. One of the guys in my group that we do, he actually comes onto the channel and talks every once in a while. We can use his or we can use yours. It's up to you. But we'll talk on the side. Um, yeah, your internet tokens. Uh, but you know what though, the internet tokens, to me, they represent that you're being seen by the community, and when those tokens go out, I think people see that DD and they go like, oh hey, look, new information, and it's pertinent to what's happening here. And I think everything that we're doing is important for. I'm like, okay, so if you'll notice, this channel is called AMC and ADD. Yeah, my focus is easily distracted, and I get onto new topics. But since we've been talking, nice little price increase. But anyways, I'm trying to figure out a way, because I don't want you to post your. Oh, on Reddit, we're already communicating. Just post me an easier way to contact you, either be email or some other type of form Or we can just use that, I guess, and you can tell me what stream you want to use. If you want to use your not stream, but if you want to use your Discord channel, or if you're okay with using the Discord channel that um, one of the guys that I view with Adam, they have a channel set up strictly for AMC. Again, this is a small channel, and we're not. Um, I'm not promoting this. I'm not like pushing it out there for anywhere. I really kind of feel like this is a um, kind of a moment to record and talk about like a lot of the things that are happening. Uh, I just sit here and I monitor the stock anyways. I love the cup and handle formation we could be building here on a 5 minute. It might look a little bit better on the 30 minute, but no, it was good on 5 minute interval looks really nice. This could be a really nice cup and handle formation starting to occur that would build up to back up to $37 and then probably go back down a little bit. We'll see if this continues. We are moving into what I like to call the hedge fund power hour from 11 to 12 Central Standard Time. But yeah, let's get on Discord together and talk. I would love. I know you've got a lot of stuff to teach me, and I'm excited about that because I love learning. All I do is sit here all day long and watch the stock. So, and I'm sure I'm going to have questions. This can be a learning point, probably more so for me than for you. But would love to have you on here and talking. I have to say, like, because there are questions that I had about that post that you had made that I want to ask you about because you had gone into like how can we utilize the information that we're seeing, and I do have questions on that. So hopefully we get to talk soon. I don't know what days are best for you. I don't stream on the weekends. I only stream from 6 a.m. until 3 p.m. Central Standard Time on trading days. So if you can find some time during that time to get on here, there's also another gentleman that I was talking to who had also posted some DD recently that didn't get any traction at all. That really I think is huge. I can share that with you later when we talk again. But yeah, I think it's important for some of this to get out. If we have this interview, I would love to splice it out of the day because I have like 9 hour streams a day, and part of the reason why I think people aren't coming and viewing this, and it's not that I'm trying to draw people in, but trying to come and watch 9 hours of a show or the dead times, because there are dead times during the day, is really difficult for people to do and follow. So being able to splice out a portion of a show and post it up there, and then post it to Reddit, if you'd be okay with that, we can post it on there and see if people like what it is that they hear or the information that, and again, just it's all about informing people, teaching them something. Those are the key aspects for me. We broke through the $36.15 point of resistance, and then now we're coming back down and testing it. On the 30-minute interval, RSI is decently low at 40.37. On the 5-minute interval, it is at 54.34, so it's kind of mid-range. And John is happy that he has his tally mark still, but I'll bet you he's nervous right now that he's going to lose it. But I do frequent Reddit quite a bit. I'm a huge, long-time fan of Reddit. Been on there for, I don't know, 3 years or more. I don't know, maybe it's more than that. I can't remember now. But I think it's an amazing place. I think there's incredibly bright people on Reddit. I used to be a Facebook user, went to Reddit because the amount I've always been one of those kind of people that likes to hang out in groups of really smart people because I'm not as smart, but I like to pick up things. So, so like in like high school or college or whatever, I'd walk into groups of people who are really smart talking about big things, and I'd just listen. And that's what I felt like going to Reddit was is that there was just incredibly witty people uh, on Reddit, and so that's kind of I dropped Facebook, joined Reddit, and that's where I've been for a long time. Um, we'll talk about. Hopefully, we can talk about. I didn't see if you replied to my Reddit. Um, oh, okay. It looks like you did, and I have not seen that yet. There's your disc. Okay, you've been communicating with me the whole time, and I haven't seen it. Yeah, absolutely. I'll tell you what. Um, come Monday, um, I have a document that I'm going to be posting onto Reddit as well as talking about on the show, and it has to do with the upcoming vote. There are, believe it or not, besides the fact that it's probably just important to vote, not just, it is very important to vote. There is a lot of information that's out there about some of the options that we have, the voting options that we have that I think are really important. We need to dive into because while the 25 million is no longer on there and a point of contention, I do believe that there's very definitely some issues that need to be talked about. For example, that nobody's really even talking about at all. EY, Ernest and Young LLC, they are the bookkeepers for AMC currently. Have been for a while, and they want us to ratify them as being the bookkeeper of AMC. And there's some really shady shit going on with E and Y. I think they just go by EY. You can pull up a lot of history on them. Uh, it seems like they're a credible, very large company that's been there for a long time, and a lot of really big companies use them. The problem is that I feel like they're probably the budget company of big companies, and as a result, what's happening is that some of their bookkeeping is kind of going downhill, and they're losing or misplacing billions of dollars for companies that are out there. So I think that's something that we need to talk about. Um, and there's a lot of topics really, and we need to talk about them all. So and how I feel about them and how other people feel about them are, it's okay to have differing opinions, but I think that we need to have those talks. So I'm kind of dedicating Monday to um, the proposals and talking about the proposals. So perhaps maybe a Tuesday meeting, if that's okay with you. That might be better, especially since it's leading up and into the proposals. Uh, and if there's anything you want to touch on it, and if you have a differing opinion, I love differing opinions, man. I absolutely love differing opinions. If you feel differently about, oh, you can't meet at all. Okay. All right, you're gonna be on the road. All right. Okay. I can do that. I can close the stream and start a new one. You want to do it today? Okay. All right. We'll do it today then. I'm not really ready, but that's fine. We'll do it today. And it's nothing like them in the moment. Uh, I can stop the stream. Okay, so normally I take a break for about a half hour leading into the hedge fund. I think that if we're going to do today, we should probably do it during kind of a peak time as to when people will watch. I do have a doctor's appointment that I have to attend that's right after closing of the market today, so I have to leave right then. Um, maybe we can meet. It's 10:43 my time right now. If we could meet at somewhere maybe between 12 and 1 my time, which would be like an hour and 15 minutes from now, that would work for me. Would that work for you? Power hour for the hedgies, right? Oh, we could do power hour today. Yeah, absolutely. Two to three. We can definitely do 2 to 3. I'd be open for that. Yeah, no, let's do the power hour. I like that. That's a great idea. We can sit here and watch the stock and see what it's going to do for the day. I think that's actually probably better. I think we'll probably get more people viewing, possibly during the power hour, than we would during like a lunchtime. So let's go ahead and do that. I'll kill the stream at just before 2. We'll connect on Discord, and then I'll start the stream up after we've talked for a few minutes. I'll go ahead and yeah, 2 to 3 p.m. Eastern Standard. Oh no. It should be 3 to 4 Eastern Standard Time, correct? Because I believe the power, because for me it would be Central Standard Time, 2 to 3, 2 to 3 Central Standard Time, because power hours from 2 to 3 for us over here. So it would be 2 to 3 Central Standard Time. So I will see then. What I'll do is I'll probably call you maybe like a little bit before power hour. So maybe I'll try to call you on Discord. I'll get on Discord at let's just go off of Eastern Standard Time to make everything nice and easy. So that would be 2:45 Eastern Standard Time. I will get on the Discord that you listed above. And wait, did you list one above? Yeah, you did. Wait, no. Yeah, you did. Oh wait. Okay, you don't have a channel. Okay, so we'll use mine. So I will send you the channel, and we can get on 2:45 Eastern Standard Time. So sounds good, man. See you then. I'm looking forward to it. It should be fun. Awesome. 47.9, almost 48 million shares traded by 10:45, 8:30, 9:30, 10:30. So 2 hours and 15 minutes in, and we're about an hour away from halfway through the day today. If we got, yeah, let's see how our volume did have a slight uptick on that burn up, or that rip up rather. But on the burn down, the volume obviously decreased. We are currently running at pretty low columns of volume. We really need to see it kind of stick in the 250,000 shares per minute traded, and we're just not quite getting there. You could look at this. I'm trying to see what kind of pattern this is forming here. This is like a lopsided cup and handle. We didn't quite make it all the way back up there. Here's our lopsided cup and our handle. I guess it's possible, right? Based off of here, you can draw your cup out here. Let's see what it looks like on the 5-minute. Yeah. I guess it could be a W. We could form a big old W for the day. That'd be awesome. The rest of the market, where are we at? Let's update everything right now. We are currently at 1 million shares available to borrow. That has not changed in quite a while. It does look like some shares have been returned to the ETFs. Let's check that out. I'm getting 2.22 million shares traded for the day, which is down 100,000 from where we were at before. We were at 2.32 earlier. Volume today is looking pretty decent. Short share interest is at 14.86. It's kind of hovering right there. Uh, I am. Yeah, I'll invite you to that channel eventually. Once I get my Discord back up and running. But just to let you know, I don't normally look this scruffy. What's going on is I saw a post a little while back. I don't know if it was a week or so ago, but they're talking about no shave until MOAS. I'm letting it grow out, and it is bothering me to hell because I just don't typically wear beards like this very often. I mean, I do tend to let it grow out, but this is about that point where I'm done. So I got to get past this itchy phase. GameStop is down about 1%. We're down 4.2%. Taking a look at our options again. Let's see where our strength and weakness is in the options. On the call options, it looks like the strength is really building up. It's almost there's a dual fight for 38 and 40, but 38 is still stronger at 26.3, which is where we were at before, and it's increased by about 4,000. 26.3, and the puts is still at 35 and is increased to 29.3. So heavy support building around that $35 mark. So you can bet your bottom dollar that they are going to be trying to close this out today at the $35 and lower range. So watch for that. Good buy points. 34.69. Since we were at 46.50 on the 20th, we have now suffered a 25.4% loss down to 34.69 with the low. So that, and again, this is my made-up term, the synthetic price failure. We typically do see a 20%, somewhere between 20 and 25% price drop by the hedge funds in order to induce paper hands. So we'll probably see utilization. We'll probably have to check that come Monday and see how that's affected our utilization. And of course, those numbers are not 100% entirely accurate. But I do think that they've definitely induced some paper hands over this over the course of the last 3 days. Not very many. Again, if we're looking at Fidelity, this is just order flow. Let me refresh this. AMC has moved back to the top. Snapchat had actually increased to above. And remember what I said earlier. Watch for the pump and dump on Snap. Yeah, I was saying that. So let's look. I wouldn't really say that it was necessarily a pump and dump quite yet, but there was definitely a drive. Did they have some kind of news? Okay, so jumped 20% to record as analysts back up second quarter strength. I don't know what I'm doing here. Let's look at a month. Yeah. Nice increase day over day. Watch for that to possibly fall, though. I would not doubt seeing somewhat of a correction on that. Quarterly earnings. Oh, PE is really good though. Maybe not. I mean, that could actually be legitimate. Anyways, who cares? This isn't about them. This is about AMC. So anyways, AMC is back up on the list of most traded stocks on Fidelity, and they are currently at a 69 to 31% buy order to sell orders. So we're not seeing a negative impact on price dropping as of yet, at least not on Fidelity. So maybe utilization won't be impacted. In fact, again, more of my tinfoil hat, but I do believe that anything lower than $40 is kind of that investment, the retail price point to where it definitely becomes more desirable to pick up shares of this stock. So if they drive this price too much further down, say for example into that $31 range that they've been trying to get back to, you're going to see a lot of retail investors buying into this because it's going to just look too sweet of a deal. Especially at $31. So they're playing a little bit of a swinging game right now between, and I was saying before, $40 and $45. I'm going to stick with that. There's that sweet gray area of $40 and $45 where investors just kind of get shy, and anything higher than 45, and they're just like, don't want to touch it, it's too high. Anything less than $40, and investors are coming back to the market. And that's what we're seeing right now in Fidelity. And there's more buy orders than there are sell orders. So there's people buying this up. They're seeing discount dollar signs, fire sale. The question is how much of this is getting routed to dark pools? How much is it costing them to have to keep this price down with these ladder attacks, short ladder attacks? Let's see what else we got here. He had posted, True Demon had posted that there was a new DD that he had published, possible AMC RIP prediction. And see, I love this. I'm glad that there's apes out there who are not afraid to post predictions, because if you're anytime you're doing technical analysis on a stock, you should be looking at it. You should say like, okay, what's going to happen in the future? What kind of data can I find that supports a movement in any direction? And if you can find that, that's really important to identifying. For an example, if this stock were to squeeze and it's coming back down on the backside, how are you going to identify when the backside really is, especially if the stock could drop 60 to 70% and still have a rebound even higher later on? So if you're not looking for these signals, then you're not going to know what to expect in the future. And this is why it's so important for us to be analyzing what's going on right now with our stock, because these are key indicators that will tell us about what's going to happen in the future. So I know on Reddit there's like so much push for people to not put out predictions or anything like that, and I'm against that. I think let the predictions come. Every time we come up with a prediction, every single day that we start looking forward to is another day that the hedge funds have to try and reduce investor um, excitement about the stock. That can swing both ways. I understand that's a double-edged sword because the more of these we post and increase our excitement for, and they fail. Um, some people would say, well, that's just creating expectations, but you have to go into this without emotion. It's so hard to say and not do, right? Like even I get excited as soon as I see prices jumping up. I get excited when I see the price falling. I get down too, but I still am looking for signs that can tell me what's going to happen in the future, signs that help me to understand why this is doing what it's doing. So let me just go ahead and pull up his DD because since we are going to talk today, I think it'd be kind of good to kind of look at it a little bit. I'm going to go ahead and pull this up on the side, get rid of my ugly mug. This may be a little too small for most to read, but we'll try. Okay, and this again is by True Demon on Reddit. Extremely plausible AMC RIP prediction trend analysis, short exempt volume DD part 2. This DD is the second part and update on my previous DD post, possible AMC RIP prediction trend analysis. If you've not read that DD, it explains my observations and thesis for why I believe short exempt share volume is correlated to each mini squeeze event tied to AMC and very likely tied to other squeeze play stocks as well. His writing is so good. I wish I could write like this. I'm gonna have to ask him a question about this because there's times where I wanted to put DD out like this, and every time I try to I do everything through my phone on Reddit, and whenever I try to create, I can get the bold, I can get the different sizes, but the spacing is what I always struggle with. Video interview schedules update 723. Oh, he's got that in there. That's cool. Thanks, True Demon. That's awesome. By overwhelming request by writers, I will be attempting to cover this DD in a video. I will be interviewing with some different YouTubers. Casey Shaw, July 23rd, 3 p.m. Eastern Time. Randall Cornett, July 24th. That's awesome. Trigger update. In my previous update, I spoke of 3 major triggers. Here are the status. Average short exempt volume over 3 million for 5 consecutive days, not triggered. Average short exempt volume over 3 million for 5 consecutive days. Okay, and then short utilization over 95%. Not triggered, 87% today. 2 to 3 days of consecutive 5% plus price increase, not triggered. If you don't want to read it all, here's a quick crash course refresher. Okay, I did read it though. What is short exempt? Why does it happen? What is it for? I want to see how much of this I need to read here. Yeah, and this was huge, guys. This part right here. The part where he talks and shows where it's printed in the rules that they're allowed to do short selling and to take naked shorts, to specifically make naked shorts during SSR triggered days is huge, and so it really kind of helps to identify like why because I always felt like before that they didn't want SSR to trigger, but there is indeed based on what he found, there's a case to be made that they do want SSR to be triggered, and because during those specific times, they're permitted to make those naked shorts. It's written. He's got it written right there. He pulled it out, highlighted it. It was amazing. And so it helps us to understand where some of this is happening, or how some of this naked shorting is occurring. Yeah, they're granted a special exception to locate and deliver the failure to delivers that gets created in the process within T6 settlement days. Why does it happen and what is it for? So I'm kind of reading through this to see how much of this is stuff that I remember, and I remember most of this from his previous one. Yeah, illegal naked short. A short exempt automatically results in a failure to deliver. Ah, dang it. My mouse is scrolling too fast. You can look up short exempt volume on FINRA's website, or you can use Quandl to look at a chart of short and short exempt volume. If you want to parse the data, you can take the following URL. Yikes. Okay, this guy either has a severe case of autism or is incredibly focused. Because I look at that and it just my mind gets overloaded. It's the ADD. The following Excel. Okay, so this is the Excel chart from last time, identifying the two different levels. My prediction based on this model. The following Excel chart is what I've been using to track the price against Ortex and FINRA short volume data. Some key facts to keep in mind as you read this. The data is incomplete. The short volume on this chart is only 40% of the total market data because most trading facilities do not report it accurately, which is what we talk about all the time on here. Not all trading facilities report short exempt separately from total short data. For this reason, the actual short attempts may be significantly higher, so the following is a conservative floor estimate. Reporting facilities do not perform regular audits to ensure that market makers and brokers are accurately reporting their numbers. They frequently lie and accept fines as a cost of doing business because the cost of being honest translates to hundreds of millions of dollars. Sure, roll it into the plan. If it's it's like overhead, right? It's going to cost you a couple $1,000,000 to make billions. Sure, why not? I'd do it. Sure, I'd walk away from short squeeze on AMC with several $1,000,000. And if somebody told me, yeah, sure, I'll take $1,000,000 of your dollars and turn it into $1,000,000,000 for you, I'd be like, yep, sign me up. First of the following three triggers which indicate a squeeze may be approaching. Short exempts to remain over 3 million consecutively for 5 days. Utilization maxed out above 95%. Yes, this is huge. And because I've been tracking utilization and it's we're struggling to get back over 90%. I'm of the opinion that our utilization that's actually being reported on Ortex is not actual utilization. So how do we know if we're hitting that? And I actually kind of believe, I don't know. A week ago I would have said we're at 100% and it's just not reporting it. But based on some of the stuff that I've seen lately, I don't know that 88% is accurate, but it might be close. I wouldn't be surprised if we were like low 90s. We'll talk about that. because I do want to know what True Demon thinks of this. You know, how do we define if we're over 95%? How can we see that as an indicator if Vortex isn't reporting correctly? A 2 to 3 day consecutive sharp price increase of 5% on the close. 100% on that. In fact, based on some of the data that I was looking at, I thought for sure that 2 days ago was going to be a 10% increase, followed by yesterday being I thought yesterday would be a much larger increase based on historical trends and where we should have been. And that just didn't happen. It didn't formulate, and it didn't make any sense at all because all the indicators were pointing at us moving that direction. And then I suspected that today would be like a kind of a break-even day today. But then following Monday, we would have seen like a negative. Like I think I had kind of calculated like a negative. Let me just call it what I'm call. I wrote it down on the back of my hands. A synthetic price failure on Monday, where it would drop like 20% again, followed by like a massive rip of 70+% on Tuesday next week. But we're not following that pattern, so I am curious to see what he has to say about that, and we'll talk about it when he comes on. A gamma squeeze. Sorry guys, I haven't been reading any of this stuff over here on the side. FYI, there are over 331,000 option contracts on AMC now, 61% calls, 39 puts. Yeah. I smell gamma, little bear on AMC. Deanna, are you serious? You're a little bear on AMC? Is it because of the price? Is it the price that's concerning you a little bit? Because if it is the price that's concerning you a little bit, that's synthetic. That's not. I wouldn't put all of your faith into the price. I would look more at some of this technical analysis that True Demon's putting out there for sure. But a lot of the analysis out there that we own the float. There's probably I'm guesstimating there's at least 2 billion shares, naked shares out there, if not more. Anyways, let me continue on with reading what I'm reading here. AMC volume in dark pools has exploded to a total of 91% of all exchange volume. Okay, I gotta click on that. Okay, wait, that's not gonna work. A dark pool is a okay, I know what a dark pool is. And I would agree with this. That's the same thing. That's my same hypothesis as to why we have seen the stock price not move up over the last couple days. They're covering their failure to deliver and to mitigate the amount of risk to the stock price exploding. They're trading a lot of the volume through the dark pools to keep it low. Is this 91%? When did he write this? 91% of the day, 17 hours ago. So that was yesterday. Okay, I do want to ask where he got that number from because I have been asking this question for a while. Because I track here, and their dark pool reporting said 71% of all of the dark pool percentages were being traded, and I questioned these numbers. I shouldn't say a lot. I've done some research on trying to figure out where these percentages are coming from, and short of emailing Stonko Tracker developer, I have not been able to identify these exact numbers. In fact, the only thing that I can really identify is slightly lower numbers than this. But the fact that True Demon is putting up values that are even higher at 91% as of yesterday, I would like to know if that was a portion of that day, and so maybe it fell 20%? And if so, how he got those numbers? We'll talk later today, and these are good questions to ask. The point of this observation is that market makers are desperate to keep up with the demand for AMC, and they are almost totally out of supply. And we all know what happens when they're outrageous demand for. So, what would they do if they were out of supply of real shares to manipulate the market? What would they do? And the obvious thing, based off of everything that he's pointed out, is you would want to try and drop the price to underneath the short share restriction value, which for today is $33.52. If they can drop it below that amount, then they can start creating more naked shares and thus kick the can further down the road. There's a floor ceiling pattern related to the short squeeze levels. Both I and many other TA observed that whenever there was a support level on the backside of the squeeze, that level became major resistance for the stock every time the price was reached or exceeded. After a certain point in time, when failure delivers became excessive, that resistance became support. One thing that I'm going to be excited to talk to him about is what we've been witnessing with the options and how they've been disappearing as a circuit breaker to keep the price from rising. And I'm kind of curious as to what he'll make out of that, and as to whether he thinks that may be some type of like I'm calling it a circuit breaker that keeps the price from driving up. Let's see here. After FTDs were closed, new shorts skyrocketed again, but this only served to trap shorts because the momentum had already turned against them by the time FTDs were closed soon after a squeeze occurred. For example, January 28th, AMC fell from $19.90 to $8.6, spiked and fell again to $7.80 a few days later. This new range, $7.80 to $8.60, let's call it the danger zone, created an area of resistance where shorts became excessive. Every single time AMC's price crossed over the 780 and touched 860 from that date forward, both new shorts and short exempts skyrocketed until the failure to delivers exceeded 0.5% of the stock's float. After failure to delivers exceeded 0.5% of the stock's float, they were rolled out on a T+35 cycle ending on May 13th, which caused a price spike to 1277, 50% plus over 860. Short exempt skyrocketed along with the new shorts to 3.4 million short exempt. T+6 days later, AMC closed at 26.6. 2 days after that, it peaked at above 73 gamma squeeze. Currently, there's a new danger zone at 42.80 to 48. I agree. 100%, 100% agree. I've been saying 40 to 45 is this sweet zone that they've been dealing with, and every time it gets up to that 45 mark, they hammer it down. They do not want to see that range that he's talking about, 42.80 to 48. I agree with that. That is the new danger zone. I'm curious to see what he says about $60. I think we might be in agreement on this. I'm not even going to say what it is I say about 60, but we'll see. Which explains why they're trying hard to keep it below this price. If AMC climbs above 48 and stays there, it will establish a new line of support around 50 to 55. Yep, shorts will have officially lost control of the momentum. FOMO will kick in. We'll close somewhere between $60 and $70, and after that happens, there will be the term that I'm using, which is a synthetic price failure, where they initiate a price dump to 20%, and after that happens, maybe $100. I'm just kind of adding on to what he's saying here at the end, because that's almost exactly the pattern I'm looking for. I missed something important in my earlier model when I wrote my first post. AMC's price is trading at 2,000% since January 1st. I realized after my first post that I failed to account for this crucial piece of data. God, this guy is smart. I'm nervous to talk to him. This guy, he's too smart for me. Hold on a second here. Okay, I just want to make sure I didn't have any messages. The reason it is significant is that at the cost of a stock goes up, the liquidity cash on hand required for market makers to short it goes up proportionally. The price of AMC was trading below $2 at the time that the January sneeze was triggered. Sneeze. At that time, short exempts spiked. I hope that's a type. I don't know. He's smart. That's not a typo. At that time, short exempts spiked over 3.8 million on January 20th and stayed above 3 million average throughout the week. On May 13th, AMC was trading over $10, 400% increase over January when it hit a 3.5 million short exempts and fell to an average of 2.5 million throughout the week before it spiked again on May 27th. A week later, fueled by massive options gamma, on May 27th, short exempts spiked over 3.2% and the price fell, or the price went from 12.38 on Monday, 524, to 26.52 on Thursday, 527. When I saw that happen originally, I just want to touch on that because that I will never forget that time frame. I quit my job. I'm just gonna throw it out there. I knew I could last a long time without having to have work and without risking my position on AMC whatsoever. In fact, I've been buying along the way. But I did. I quit my job. I decided to quit my job on 527 when it hit that 26.52, and I'll tell you the reason for that is that I had done modeling on GME, and the modeling that I came up with on GME signaled what I would consider to be the end of our process of getting to the squeeze. And sure enough, just a couple days later, it happened. You know, we all know what happened at the beginning of June, and I felt so vindicated. But there was one little piece that I was missing of the puzzle, and that piece was the piece was is that I thought that the margin calls would start happening in the high 20s, and because there's the relationship to GME and AMC is volume. And when you look at the proportion, when you proportionally look at the two different volumes, they're massively different. And you have to take that into account, right? So when a bank's looking at all this data, they're going to be looking at like, okay, well, what are your chances of being able to make a recovery from this as somebody who's shorting a stock? And with the amount of volume that's involved in this, our squeeze point's different than GME's. In my opinion, strictly my opinion, that point is probably somewhere in the range of 4. I think the number I was using was like 4.56. Maybe, was it 4? Yeah, 4.56, I think. Don't even ask how I got there. Long story. But having said that, you know, if I felt like $25 was if I felt like $25, actually I think it was $20 or $21 that I felt was like kind of like the starting point for our squeeze. Then you multiply that by 4.56, which was the part that I had missed, and when you multiply that by 4.56, you get something like 90 to 95 bucks. And so because I missed that, really, and I'm kind of, I don't know if he's watching still or not. He probably is. I'm giving away information too early. But because of that, that to me means that our squeeze doesn't really, or the margin calls don't really start to happen until we start hitting those price ranges between 90 and 95 bucks. I'm just going to go ahead and give it away. Everybody's thinking it's 60. Everybody seems to think that there's this powerful number that if we hit $60, that's it. You know, the margin calls are going to start happening. I don't think so. We've already hit 70s, and nothing happened. So it's got to be higher than that. And you know, it's a long ass story that I really don't want to go into, but about how I got to 4.56. It could actually even be a little bit higher now, because when I had originally formulated that number, it was based around the fact that we had, I think at the time, 400 and was it 400? I think it was slightly over 400 million shares total available to AMC, and now we're at a little over 500 million. So Those numbers have changed. Anyways, moving on. Short exempts stayed on the high on both sides of the gamma squeeze as market makers were desperately trying to keep up with the orders, while utilization was maxed out and there were no shorts to borrow as they took all the buys. Now AMC is trading between 35 and 45 range. This has an effect of requiring 3 times to 4 times liquidity for the market makers to have set aside just for AMC, as it did back in early May. So it's important to identify what liquidity means. I'm not sure if everybody knows, but your money that is tied up, I'm willing to be incorrect on this, but the way I understand it is that if you have, say for example, you have long positions in a company, that could be considered liquidity, because if it's cashed out, or if it's sold, it's now available cash that you have. I'm relating this to something that happened to me when I was trading through Fidelity, and they told me, when I was talking to them on the phone, they told me that my liquidity was based off of everything that I had in my account. So if they sold it all, how much would it be worth? So if you went and you look at Citadel right now, you can look at Citadel's total. Citadel's liquidity is down quite a bit. They were in, if I'm not mistaken, they were in the trillions. Oh no, wait, that's right. Million, but no, they are under trillion now. So their total portfolio value currently is at 407 billion. Now I don't know how much of that is long positions versus I don't know what the breakdown of that is. But that's a lot. It's a lot of money. Further, margin requirements to short AMC stock has gone up to 800%. To satisfy these requirements, market makers must have between 24 times and 32 times the liquidity they had in May in order to trade AMC. They are losing control. There are multiple repeat patterns concerning T+6 settlements, and this is something I want to talk to them about, this T+6, because there's a little bit of there's stuff that I don't know about it. I don't understand the cycles, and so I do want to cover that with them, because being the smooth brain ape that I am, and the wrinkle brain that he obviously has, he'll be able to explain to me some of these cycles, and I think it'll help me understand what's going on. Every single T6 period, there's a spike in something to do with shorts. T6 days of short exempts causes a spike in failure to deliver. T6 days of a price trading above the danger zone causes short volume to skyrocket by 4 to 5 times. T6 days of failure to deliver causes short volume to drop massively. T6 days of low volume, T6 days between spikes in the moving average of new shorts on loan. Unless there's overwhelming amount of failure to delivers. There are trends all over the chart that tells a story, and I'm slowly beginning to understand what it means. But everything has to do with the market makers, because they are the only ones who have access to short exempts. They're the only ones who have T+6 days to close failure to delivers. They're the only ones with enough liquidity in option market to move the market based on pure gamma. And they're the only ones with the ability to settle retail investor trades using short exempts and borrowed shares. All of this indicates that if apes take their business away from the market makers en masse, they will not be able to hold the price down. I predict that if the market makers are somehow forced to take millions of short exempts due to 100% utilization of loanable shares, it will force another squeeze to occur. Agreed. What does this all mean? As the price goes up, despite dilution, the moving average of short exempts have proportionally gone up, indicating that market makers are struggling to remain solvent, to have enough cash to cover their trades. You know, and I just said Citadel. I shouldn't just pick on Citadel. There's plenty of hedge funds out there that don't have nearly as much portfolio value or liquidity that they can use to do this. So the more, or the closer they get to these failing points, the closer we start to see margin calls. And when margin calls start happening on even the small guys, it's just going to move up the chain like dominoes. The T6 settlement cycle between short exempts has gotten harder for market makers to maintain, and they're being forced to maintain a certain cycle of short exempts, which results in failure to deliver, which they must continuously roll by borrowing more shares in order to close them. Yeah, they have to borrow them because they can't get them off the market. And the only way, or if they can get them off the market, the only way that they can do that is through these synthetic price failures, where they drop the stock like 20% over a previous high, and some of these paper hands are developed, and sell shares to the market, and that's where they pick some of them up. But the cost of doing this has caused a short exempt to maintain a higher moving average during low volume periods, which you can see based on the dotted black line on the chart. Notice that large spikes in new shorts on loan also coincide with sharp price increases and short exempts, and I have figured out what this means. This is the important part. Okay, I'm ready for it. Wait, I don't have my water. I'm ready. Market makers are the one who are borrowing the shares without shorting them because they have to in order to keep their failure to delivers at a manageable level. They have to continuously borrow shares in order to cover failure to delivers every single day. When the shares to borrow suddenly dry up, they are forced to take short exempts in order to maintain market making activities. But what happens if suddenly there are no shares to borrow? Short exempts will skyrocket, failure to delivers will skyrocket, and the price will be forced to rise. Remember, market makers must take the other side of a trade in order to make money regardless of the price. If there are buyers and no sellers, and there are no stocks available to borrow, then it forces the market maker to take short exempts. Are they abusing short exempts to stay afloat? You betcha. But in order for the scheme to work, they need market liquidity and available shares to short in order to cover them. All right, let me let that thing sink in for a second here. They need market liquidity and available shares to short in order to cover them. If they're forced to take a more short exempt than there are shares available for lending, then they become their own enemy by naked shorting a share they cannot later be borrowed. If this happens and the price keeps going up, they are forced to buy the share at market price on T6 in order to cover the failure to deliver. Market makers are approaching the brink of a cliff that they cannot go back from once they fall over the edge. Once they go over the edge, this is what will happen. When utilization hits 100%, market makers run out of shares to borrow. If they cannot borrow, they must buy shares. They're buying them off the market. If they cannot buy shares at a lower price, they must take a short exempt. Short exempts results in immediate failure to delivers that must close in 6 business days. If market makers have outstanding failure to delivers by the 6th business day, they are forcibly restricted from shorting by the SEC. However, there should be a however in there. If market makers are restricted from shorting, they must buy shares at the market price for a loss. This may have this may have already happened on May 27th. If the market makers are forced to buy shares at the market price and the market dries up, then they are forced to post a buy order for any available share at any price. If while this is happening, the market makers' liquidity will dry up. They will be forced to ask their bank for a loan or the Federal Reserve for a repurchase agreement or a repo. And repos are something I really don't understand. Broker dealers issue margin calls. Margin calls ensue to bring back liquidity to the banks. Market makers stop. So this is the whole process. We know what the process is going to be. Key takeaways. What can we do to help? Absolutely hold stronger than ever. Rule number 1, I've always said from the get-go, is don't buy more than you're willing to lose. And rule number 2 has always been hold. Everyone needs to get their stocks off payment for order flow platforms. Okay, so I'm on Fidelity. I have Pro set up. I have not been able to. I haven't made any purchases since I've done all of this. But I have researched it all, and I know how I'm going to do my next purchase order. But I'm waiting for that to happen. The price has got to get to a certain point for me. I know the mantra is to buy the ask, but I do have price points. I feel like there's certain levels that I have to support. So I'm doing that. Disable stock lending all brokerages. I've done that. Use direct market orders to NYSE NASDAQ for all stock purchases. That's part of what I've done, or what I will be doing from here on out, and spread the word. Apes' most powerful weapon is social media and overwhelming numbers. Absolutely. Knowledge is power. We need to get this out there. We really need to make sure. And you know what the big problem with this is? Being that I've been doing this for a while, it's not as much to ask of somebody with my level of knowledge into what it is I'm doing with trading to do these kind of things. The problem is that I know that there's a lot of people who've gotten into this who are not this involved. And trying to get them to be this involved is probably one of the more challenging parts to all of this. And is partially, probably way down on the list, but is partially why I'm doing this this YouTube channel, because anybody that I've talked to about this knows that I'm running this channel. I used to send out weekly text to them and saying like where we're at, what's happening in the market, where we stand, why we're seeing certain things happen. And as I started, as I was doing, I was sitting there going like, I'm monitoring all this at home from anyways, and I'm just watching the market run. Why not just put together a YouTube channel, and something I never thought I would do, and just talk to them. And if they wanted to come back and look at what happened over the 9 hours, they could come in and they could just see what I'm doing for 9 hours of every day. So that's why I'm here. And I'm not watching what anybody's writing. Okay, good. Nobody's writing anything as of right now. So let's see where we're at here. I'm going to pause for this for just a second, just to kind of take a look at what's going on right now. We've had quite a bit of consolidation, like just a whole lot of nothing. Volume, look at that. Volume is 56. Holy moly. Look at how much the volume has just dropped off. We are currently seeing columns of volume that are like 74, 86. Like the highest right now is low 200s. We need to see that volume kind of in the 250 or more, 250,000 shares a minute or more. So this is a real stall out. My prediction on volume for the day, by the way, is between 80 and 100 million. I was starting to look like I was going to fail for volume prediction for the day, but it's actually at almost halfway through the day, getting pretty close to being right. And typically the volume you can see it falling over the day. If it continues like this, it'll be low volume. And the dangerous part about low volume is that it's very easy for the stock to be manipulated in both directions. It can go up or down really easily, fast. So that's having looked at that. GME is currently up on the day at just slightly over. Oh, now slightly under. Spoke too soon. Our inflow versus outflow is almost tied up. So we brought the inflow back into almost an even break on that. What do we got here? It looks like not a whole lot. There's been some ETF shares borrowed, but not a whole lot. Taking a look at Ortex. It looks like the short share interest has decreased ever so slightly. I think it was like 14.86 before. It's 14.79 now, with a total of 1.79 million shares borrowed for the day, which is down. We were at 2.22 on the last check. We are down to 1.79. And checking options. Let's look at the options chain here. I just had this strange vision of True Demon coming in and being like, dude, you need to look at it like this because it's so much easier. And I'll be like, oh man, thanks. But let's see what we got here. Previously, our level of support was highest at $38, but that's almost about ready to swing in the $40 direction. So close. So we're going to have to give it up to the $38 on the call options at 29.4 thousand. And on the put options, it is currently running at 35.7 for 35, which is up from 29.3. Looking at total options for the day, we'll pull this back up here real quick. We have a significantly larger amount of calls than we do 336,000. Sorry, 336. I can't talk. 336,000 call options versus looks like 198,000 puts, which are far more in the money currently. Is that right? That doesn't seem right. 35, 45, 50, 60. Yep, that's about right. Okay, just want to make sure that number was pretty accurate. It does look good. All right, continuing on from where we left off with True Demon's second application of DD. All right, where were we at here? So I've done all these things. I'm trying to spread the word. I'm not huge on any platform by any means, but I need to get better at Twitter. I watch how much other people post, and it's absolutely insane. He's going to leave us with this. Each share is a drop of water in the ocean. To make a tidal wave, all drops must be pushed toward the same direction. Blow this up, and I'll see you on the moon. Clarification is additional data on dark pool volume exceeding 91% as of 7/22 and spelling grammar fixes. 91%. I really want to know where he's getting that from. I agree. I can't stress enough how important this DD is. My only wish is that he would have put, because I didn't see it. I see this looks like the same one that he had. Well, it's got a few more lines in it, but yeah, the one that he had from previous, this one right here. This, everybody keeps talking about like why is there this parabolic price action happening, and I think you can get more from what's happening on this page than any DD I've seen on Reddit, AMC stock in a while. This is a hot piece of information right here, and definitely needs to be posted up everywhere. People need to see this. This is a lot of really good information. I need to take a break. I have not had lunch yet today, and it is important to stay hydrated and well fueled so your brain is working. I definitely want to have a good brain on for when I talk to True Demon later. The guy is going to run circles around my head, and I'm looking forward to it. So I will pick his brain at a little bit later today. It's going to be 3 p.m. Eastern Standard Time. So we're going to do the Power Hour, and he can close out the day with us. It should be kind of fun to do. I'm really excited about talking to him. So I will be back in probably about 40 minutes just to take a quick lunch. I leave everything running for everybody to just observe. But go check out True Demon. Check out his post on both the old data and the new data. So these are the failure to delivers. That's that big grouping that we had from June's price spike. I was so excited the day that those came out. Sum of exempts. Sum of utilization. See, we need this to go up. I'm really curious to find out what his perspective is on. Boy, won't I be pleasantly surprised if it's not a him? But yeah, we need to see. I want to see what he has to say about utilization and its tracking, and as to whether or not he thinks that's an accurate representation of what's being tracked. So, anyways, I'm going to sign off for 40 minutes. I will be back, and we'll just leave this running here. Hopefully, we can pick up volume. Let me look and see if there's any trends that I see real quick before moving on. 30-minute interval, we have RSI a little low. On a 5-minute interval, RSI is kind of mid-range. So there definitely is room to knock the price down a little bit, but there's also plenty of room to move up as well. I mean, the only thing that I could really draw out right now is kind of a stall out in the market, like a points of consolidation, right? And how far out is that going to go? Just going to kind of draw it like this. Just trying to hit 2 touch points at the very least. And based off of this, you know, this is all not very accurate TA, but I'm just kind of trying to give an idea of where we might kind of break out of this trend and see like a maybe some more movement in the stock. Let's see. 11:30, 12:30, 1:30. I'm gonna draw the box right here. If there was a period of time that I thought that it was going to break out of this, it would probably be around that time. I'm open to being wrong, and sometimes I am wrong, sometimes I get it right. But let's look for that, and I will be back. Enjoy, guys. See you on the flip side.
Yo, can you hear me? Yeah. Okay. Ah, okay. So let me see. I think I can create a password private channel. It is a private channel now. Only select member and roles will be access to view or connect to this channel. I guess you have. Yeah, you can. Yeah, you should have permission to create an invite, I think. Oh, I can create one real quick. Oh, mm-hmm. Yeah, that's all right. I think you click on home at the top and then click on friends. No, it doesn't. Who is True Demon, yo? Let me see what this True Demon guy is about. Mhm. Can you share your screen? You can like share your screen with the button down there next to video. No, just streaming here. Like, people can't see it. Okay, let me try. Let me try on my end. Let me show you how it works. Share. Um, just gonna fucking share the screen. Go live. You see? Can you click on my name? Mm-hmm. No, no, click on the like mouse over my name. Yeah, watch stream. See, I'm sharing my screen. No, you got out of a true even interview. Okay. This fucking idiot in the Reddit, Casey Sean. I can't find him on YouTube. It's like the fucking link is there. It's idiot. Fucking dumb ape. Are you still live streaming? I didn't know. You did because I just clicked on your YouTube, but I hear it.
I apologize for that. I'm just gonna. we're trying to figure some things out on on Discord to try and set everything up for the interview later today. So I apologize for any kind of blurt outs there that we may have had. Sorry. Adam wishes for me to say that he's a dumb ape and a retard. And I am a certified retard as well. Okay. All right, guys, I am back, and I'm back with Adam. Adam's here. He's going to help me set up the Discord for later today. We are actually talking through the Discord right now. We haven't done that before on this channel. Most of the time that I've ever done anything with anybody, it's through Skype. But we're currently doing that. It looks like that window, we started to almost break outside that the triangle that I had kind of formed there earlier. But I mean, it's just, it's real close to the edge and then started to peak up. So we're outside that window that I had set up from earlier. I'm going to go ahead and delete that. We're still trending inside the wedge, but it does look like we might be breaking out the top of it. Let's see. John's asking me what happened to my predictions on the price increasing day over day over the last 2 days, and that's actually a really simple answer, and that's dark pools. If you go to the dark pools and you look at what the increase in shares were and traded in the dark pools over the last 2 days, there's an exponential value increase from, especially on the last day, 71% from 67.1%. Day over day on increase. And if you look at those values in contrast to where we've been, even just at the beginning of the month, that's over 10% additional shares traded into the dark pools. And all of that is simply just to try and avoid increasing the price so that they don't have to show increases. Okay, we were getting down here. It is 12:40. We have approximately 2 hours and 20 minutes left of trading, and volume basically dried up and looks like a dried prune. We started to pick up volume a little bit here, and as we kind of drove up in price here a little bit, but again, volume back down to 114,000 shares per minute. Okay, so trying to prove me wrong, down goes the price. Looks like we are going to break out. And here comes the volume.
I believe Trudyman just joined the channel, so I'm gonna try and invite him into this channel.
I'm going to go ahead and mute the audio capture. So you're muted now, just so you know. No, my audio capture shouldn't be coming through at this point. Hot seat, hot seat. Got to get the cool blanket going. Got to fluff out the cool blanket here. He might end up. Does he need a Does he? Okay. I'm not looking at my channel to see if he's typing anything. Okay, because he's not typing anything into the channel currently. Yeah, hot mic moment a little bit ago. Sorry, guys. That was unfortunate. We're all human here. But my stream should only be detecting my voice at this point. Let's see, we have a general. And I will be actually canceling the I will be canceling the not canceling the show, but stopping the show at about 3 p.m. Eastern time, and then restarting the show, or maybe a little bit before, and then restarting the show for Power Hour, and we're gonna go ahead and talk through the Power Hour. All right, so the market is definitely trending in another direction. It's market. The stock is currently trending in a different direction right now. I have such a hard time. Yeah, we're still going with 3 p.m. Eastern. It is so difficult for me to multitask. I am probably the worst person in the world to multitask like that. If somebody's talking to me on something else, my entire focus like gets lost and goes to something else. So when I talk to True Demon, I'm probably not going to monitor a lot of the things that are being said. I'll try to look at it at the best that I can to see if people are asking questions, because I want to ask questions. I'm sure there's other people that want to ask questions, and I want those to be answered as much as possible. So we'll try and get as much covered as we can. Let's look at the market real quick. Where does the market stand right now as far as advancers versus decliners? Kind of get a little litmus test of where we're at. Let's take a second for this to update. There's currently 3,178 decliners, or sorry, advancers over 3,390 decliners currently. So the market is showing green, even though there's more decliners than there is advancers. Amazon is on the side of advancing for the day. There looks like there's some media for that. Cinemark's down 3% today, so are we, 3.7%, and GME is currently down 1%. Doge is continuing to fall. Here's that second drop that I was talking about. This is going to continue to fall, I'm pretty sure. Pump and dumps. Pump and dumps. That's the name of the game. That's how they get their part of their liquidity. They've got a lot of stocks out there that they do that to. I'm still leaving up this this trend that I've got, just because we although we did break out, it's ever so slightly. I would probably just kind of extend this a little bit, extend it out to include some of that. I don't feel like it was enough of a break to really include as outside of the trend. Looking at total shares available to borrow is still at 1 million. It hasn't seemed to change most of this later half of the day today. ETFs, looks like they have borrowed a few, not very many. Options. Let's take a look at that actually real quick again here. So currently in the money versus out of the money options, we only have 18,841 shares in the call options that are in the money versus 66,828 that are in the money in the puts. But overwhelmingly, the out of the money calls are, the total amount of calls versus the total amount of puts are much higher. And you do have to remember too that we've watched these numbers reset several times over the last week, and that's definitely the hedge funds repositioning. And when that happens, it kind of gives you a good idea for how many of those how many of those option contracts are their own option contracts. I need to start making a list of questions that I want to ask True Demon, and just because I think I need to kind of cover a little bit of some of his information to ask questions. So I think one of the first things that I think people really need to understand is probably the broker to dealer fails to deliver, the market to maker fails to deliver, and the DTCC settle failures to deliver, and understanding those T15, T6, and T14 cycles. Those he touches on that, but I think that there's more to understand there. Maybe hearing somebody say it. I know there's different types of learning, and for me, maybe just reading is not good enough. I need to absolutely just hear him talk about it, and maybe that'll help me to understand. And then also, it's maybe it'll be fun to kind of take a look at Ortex while we're talking about it, and just kind of pinpoint and highlighting those different points on Ortex. Currently, we are at 1.23 million shares borrowed for the day, which is down from 1.79. I'm still looking at somewhere between 80 to 100 million shares traded for the day, unless we have some kind of amazing breakout where volume starts to suddenly increase by massive quantities. I don't tend to see too much of a increase in volume between now and the end of the day. Let's see what else we got going on here. So I'm gonna kind of read through some of his two posts that he's got, the follow-up, the possible AMC RIP prediction, trend analysis, and I'm gonna do a write-up. We hadn't actually decided on an interview until today, and so I hadn't actually written down questions because I didn't know if something was going to happen or not. But it's happening so fast that I'm going to need to come up with a list of questions because I don't want to leave empty-handed in this interview. I want to learn a lot from this for sure, and I think there's a lot to be learned. The True Demon is barking up the right tree, in my opinion. All the data that he's seeing is stuff that I've pointed out on this channel long before he put it up there, and I've been saying repeatedly over and over and over, and I've posted on Reddit. There's this indicator. We're seeing these indicators popping up, these flags that are showing when we can almost predict when there's going to be price increases, massive price increases, small price increases, you name it, but all stemming around this particular data. And it's exciting for me to when I first came across his post, I was like, holy shit, this guy's got it. He knows what he's talking about, and this is it. This is what's happening. And not only does he have it, but he puts it together so well. The information is just um, extremely well put together. I'm going to go ahead and open up a Word document here over on the side. Let's see here. So very first thing I think I'm going to ask is describing kind of like the cycles. So I'll pull up Ortex for that because I think that there's indicators that show these cycles that he's talking about. And I'll probably, in that particular instance, I probably will just pull up his own charting because those cycles are in there, I believe. Yeah, he has the different cycles in there with that. So I'll probably just pull up his own work. It would just be easiest. I'll pull up Ortex and we'll track it. The one thing that I want to know too is he's tracking free float on loan versus on loan, which is something that I have not. I'll pull it up real quick here. On loan is this value. Free float on loan is this value. And if you look at them, they pretty much chart, follow each other's charting exactly. So what I want to understand is what's the. I mean, I understand what the free float is, but why is that different than the on loan amount? Are those two different places that they loan shares from? And if so, how do I see that? Is that other value that I'm looking at on Stonko Tracker when I'm looking at that? Is that the free float versus the on loan amount? Those are questions that he can help answer. And this is probably going to be super remedial things for him to cover just because he seems to be very knowledgeable in what it is that he's talking about, whereas I not so much. And so this is going to be a learning experience for me, learning some good information. So can you describe the cycles in a way that my smooth brain ape can understand? If he's listening to the show now, he's gonna get a little preview in advance of some of the questions I'll ask. If anybody else has any questions that they'd like to post now, go ahead and post them on up there because I can definitely write them down. So I understand what a failure to deliver is. And a failure to deliver, I'm just going to briefly describe it because I do understand it. I want to just basically reiterate what a failure to deliver is. So when any one of these market makers takes out a loan on shares, they have a certain period of time that those are required to be due back to whoever they loaned them from. And if they don't return the shares within a certain period of time, then that's a failure to deliver. And I think I thought the failure to deliver cycle ran on a 15-day. Let me see what he's got on his chart. Broker dealer failure to deliver. Market maker failed to deliver. He has market maker failure to deliver is at T+6. So sends FTD to market maker. That might be right. The broker fails. Okay, so it's the broker, not the market maker. So the broker fails to deliver, and that's the T15 cycle. So I think I'm right on that part. I just said some of the names wrong. The market maker sends the FTD to DTCC, and that's a 6-day cycle. And DTCC settles failure to delivers with pure black magic fuckery at T+14. I really like this guy because I know that we're already going to be talking the same terms when it comes to fuckery. And I'm hoping that maybe I can transfer my synthetic price failures terminology over to him. SPF. That's when the SPF is when the hedge funds when they control the price of when they short basically when they short ladder attack the price down, and they do it in such a way that it decreases by about 20%. We keep seeing these 20% drops in price from previous highs, and those drops are what I call SPF. So they're applying their SPF to create paper hands. That's how you get paper hands, right? White cream, paper hands. That's how you get SPF. And so that's synthetic price failures. We're gonna make that famous. Let's see. My dog really wants to go outside, but I think it's because the lawnmower guys are here. He wants to attack them, don't you? You just want to go attack them, don't you? I know you do. Yeah. Silly dog. You can't. No. Okay, next question. Hold on a second, I gotta take a phone call. Okay, I am back. Where can we see? I know that was one of the questions I wanted to. Oh, another call. Sorry, 1 second. That was my wife. She's so sweet. She's asking me if I want a Dazzle coffee right now. I said yes. I'm gonna peak my my ADD with a little bit of caffeine before I get to talk to True Demon. Sure, let's do that. Let's see. So what was I saying? I wanted to ask him about utilization, because that is something that he had mentioned, that getting it over 95%, and I highly agree with that. Getting it over 95% is key. The problem is, how do we know if we are above 95%? I think I think he's considering that as util. I'm not sure. Okay, so the question is going to be, how do we know if we are above 95% utilization if we can't trust Ortex data fully? We don't know. We don't know if Ortex is reporting. They're only reporting what's being reported to them. So in the past, I had been of the mindset that we were well above a utilization of what it's reporting right now, which is 88.15. I mean, even 7 days ago, if you look at it, it says 91.31. We were way up here, right there, 7 days ago. Do I think when the price increased from $20 to 60 some odd dollars, $70, that we actually had a utilization of 98% drop all the way down to 79%? That would mean that we would have had to have had a 20%, nearly a 20% drop in utilization. I don't know. I would like to believe that there was not 1/5 of or 1 out of every 5 apes is a paper hand during that period of time. I'm not against the idea. I'd be more inclined to believe that there are paper hand new apes, and those were technically some of the ones that kind of got in at a later price range. But I don't think that was 20% of the population. I feel like utilization's got to be higher than what it's being reported, but maybe not as high as 95%, but definitely, I don't know, somewhere in the range of like 91, 92 maybe. But I do want to see what he has to say about that. I keep saying he. I need to say ape. It's something other than him. I don't know. It's a him. They could come on here, and I'd be totally surprised. Let's see. What else is there? I wanted to ask that question. I want to touch on the idea that when SSR is tripped, like, are they purposefully doing that? Is SSR trips a method to purposefully create naked shorts? Because under what he had identified in he went into the reg show. Looks like CFR 242.203B1 rule 203B1. Basically, that a broker dealer, basically that if they can locate, quote unquote, locate a requirement, the market maker is engaged in bona fide market making in the security at the time they effect the short sale are exempt from requirements. So they can basically create naked shorts during those periods of time if they feel that they are within certain reasonable grounds to be able to create. What do they call it? They call it equity security. So in order to create equity, they're allowed to do that during the SSR. So is SSR tripped on purpose? Do they do that? Do they create this position for themselves and where they can create naked shorts during those times? Charting analysis and pattern and buy signals. And I'm gonna ask if he's listening, if he or she is listening. I'm gonna be asking. I will ask an uncomfortable question. This is something that I've had in the back of my mind for a while now. And this is a what if type question, and it's going to be kind of a multi-part question. The question is, where do you believe that shares to borrow are being created, or by whom? Actually, it's not fair to ask whom, because that's we don't want to ask whom. Do you believe that? Probably we'll just get out the where part and just say, do you believe that shares? How can I say it without actually pointing out one specific company? How about this? Do you believe that shares Okay, so here's the question. Do you believe that shares being lent are coming from institutions that hold long positions, and what do you feel would be the objective of this? And I know what my answers are for that, but I just kind of want to see where he stands on that matter, because there's something that's important that's going on here, and that's that these hedge funds are getting shares to borrow from somewhere. And part of what I've been saying repeatedly is that in order for us to if you're in a fight, if you're in a war, uh, and you want to stop your enemy from attacking you, one of the best things to do is to attack their supply chains. And so therefore, if you looked at lent shares or shares available to borrow as ammunition, identifying where those shares come from and how they're created is probably something that you really want to look into, because um, putting a focus on it helps you to identify what's happening in the system. So, I want to see what they have to say about that. But I have a side question to that, which is I'm not going to say what it is. This is the uncomfortable part. Okay, very uncomfortable question. It's a very controversial question. It's super controversial in the fact that it is very unape-like to even talk about. But I think it's something important to just kind of have in the back of your mind, to think about these kind of things, because uh, buying and holding is the main strategy here. It really is. Uh, but the problem is that we do have a lot of paper hands, and with such high volume in this stock, if we do have 1 out of every 5 apes is a paper-handed ape, perhaps there's a different type of strategy that needs to be formed in this particular instance because of the fact that we do have so many paper hands. That's if we believe that those numbers are accurate. So we'll talk about that. I think that's something that's important to touch on. Let's see. I forgot I had Ortex up here. I'm sorry, guys. It looks like we started to break out of that wedge. I thought we were going to break out going up. Again, this could just be a little bit more consolidation because if you notice, volume just really isn't changing all that much. I could probably draw this line out here, do the same thing I did earlier. If I could actually draw, just kind of extend this out more. Something like that. I mean, I think we're going to need a significant jump in one direction or the other in order to see a substantial something substantial that identifies that we're really moving out of like this consolidation period. Because volume just really isn't increasing. It did a little bit, but not as much as I would have expected. I mean, this last minute was 149,000 in volume. That's really low. Needs to be higher. Okay, let's see. What other questions can we ask here? Okay, upon seeing these, plus the latest bullish news from Adam Aaron, I will be putting every last cent I have into stocks and deep out the money call options. I'm not going to ask about his or her position on that. I don't particularly have a problem with stating what my position is. Hi Amy, I'm on a live stream, just so you know. That's okay. I don't know what my position on. Well, I know for anonymity reasons, I'm gonna protect that. I don't want them to feel like they should disclose that. I mean, they've already said that they're going to do it. There's no need to say what prices, but we might touch on options. I will talk about options. So let's talk about options. One thing that I want to talk about specifically is, and it's only because I have a lack of knowledge in option trading, but can you effectively buy, and I would never do this, but can you effectively buy put options with the same goal of a call option? But we'll find out. Let's talk about options. Specifically, what do I want to say? Okay, and what we'll talk about too is what we've been seeing over the past week or so. What we've definitely been seeing is that it seems like options have been used as some sort of circuit breaker. what we'll see is that it appears like the price is starting to exponentially rise, and almost seems like it's could be on the verge of out of control. And then when that happens, irregardless of where it's at in the options chain disappears. The only options that are left available, I believe, are retail investors or maybe small company options that have been purchased. But you can tell that that in mass, in unity, some hedge funds options just disappear from the list, and then they reposition them. And so I want to know, like, how could that be used as a circuit breaker? Because almost inevitably every single time that happens, what we watch is the spike in the price just almost immediately curves and into a flatline plateau, and then starts to head back down again. So yeah, we'll talk about that a little bit. Again, breaking out in price, heading upwards again. Let's see here. And I have a feeling in retrospect, we're going to come back whenever it is that we come back, and True Demon's going to have a lot of people wanting to know more information. And so hopefully this is something that people can go back and look on. Maybe it'll save him or her from headaches of having to explain how they got the information that they got, where they got to. We're going to have a lot to cover in the hour that we're going to be speaking, but hopefully we can cover it all. Let's see what else. I almost wish that he or she had their own YouTube channel. I would subscribe to it in a heartbeat. I see that they're saying that overwhelming Redditors have requested them to put this together in a video, and I'm honored in the fact that I can help be a avenue for that. So again, like I said before, we'll be stopping this stream probably in about 20 minutes or so from now. Take maybe like a 20-minute break in between, where I kind of get a chance to talk with them about what we're going to be talking about going forward, setting everything up, getting it ready to go, and then we'll restart the stream, retitle it and everything so that it's got a good proper title, and move on from there. We want to, so the three trigger points are average short exempt volume, over 3 million for 5 consecutive days. Average short exempt volume. Okay, I want to know where to look that up because I'm not sure what indicator that is. Let me look at this. Average short. Average short exempt volume over 3 million. Is that the borrowed shares? We need to find out where we can look that up. Because if these are three good key indicators on things that we need to see, then we need to be able to know where it is that we're going to look for those. Average short exempt volume. would that be on here? I have net short volume on the dark pool trades. Maybe that's what they mean. What true demon means. Net short volume. Average short exempt volume. That's a question because I need to know what that means. That needs to be one of the first questions. Maybe the third question. Because I'm going to track this. I'm going to track this stuff daily. Religiously, I will track this stuff. These three key points, and it's real easy to track the other two. Short utilization over 95%, super easy to track, and then 2 to 3 days of consecutive 5% plus price increases. Seen that so many times. Today he's saying we had 87% today, so that should be I should be able to find. Oh wait, that's the wrong thing. Yeah, we're 87% today. We're 88.15, I think, is what I'm pretty sure that's what, just utilization. $3 million. I'm not sure where the $3 million comes from. It's got to be in borrowed shares. The borrowed shares. Because we did have, and I would agree with that. 2 days ago, was it the 20th? 3 days ago. 3 days ago on the 20th, when we had the huge price, well, not a huge price increase, 25% on the day. That's huge. When we had the 25% increase on the day, there was just over 3 million shares borrowed on that day alone that I had tracked. And I wasn't looking at the borrow change on Ortex. It was just actually data that I just manually tracked over the day using the Sonko tracker. So, yeah. And we did see a big price increase that day, more than 5%. So, and that is 3 days that we want to see, and I would agree with that. Okay, so we've broken really nicely out of this. And you know what? If we look at the day as a whole, on the 30-minute, what's that starting to look like to you guys? Oh boy. Oh boy. RSI is starting to shoot up. It's about halfway in the 30-minute interval. A little high on 5-minute interval. It's at 68.74. We might be reaching a little bit of a limit. I don't have a good Fibonacci retracement for this time frame right now. I've destroyed some of my other ones from the past. I would say that this is a good breakout from this wedge. So I'm going to go ahead and delete it. Sorry, I'm just trying to look through his most recent DD to see if there's other questions I can be asking. Oh, I know what else I wanted to ask. One of the questions I want to ask is, how do you track dark pool percentage volume traded for each day, and do you agree with the Stonko tracker site data? And my wife is here with my coffee. Oh boy. Oh, I was gonna say, what's that's not it. Is it over here? Oh, thank you. Thank you so much. Appreciate it, hon. What's it? Oh, cool. Maybe I can do a knife reveal. I don't know if I should do that. I got my monthly knife order. I ordered this from this company, a monthly knife. Mm. Boy, just what I needed. The doctor ordered that. Oh yeah, that's good. How do you track dark pool percentage volume traded for each day, and do you agree with the Stonko tracker site data? I want to know because he does talk about dark pool has exploded to a total of 91% of all exchange volume. Oh, he's talking about the entire exchange. 91% of all exchange volume? Is that for real? 91%? I want to know where he tracks that. I want to see it. I'm not doubting it. I'm just saying I want to be able to track that myself on a daily, especially for AMC. That's pretty huge. Talking about, um, we're going to meet in about 15 minutes, so I'll probably end the show here in about 10 more minutes, just so that we can work on setting everything up. But talking about, and I will come back on, guys. So for those of you who are watching right now, I will be back. Duncan, especially Duncan, I wanted you to make sure it was at one point not all day. I think 73% over the day. Yeah. So dark pool trading, 71 is what Stonko Tracker had reported for yesterday. He's saying over the entire market, he's saying 91%, which is, it seems really high. I want to know how he's tracking that. But Duncan, in case you weren't listening earlier, and I wanted you to hear this especially, I have an interview with True Demon. He is a Redditor. He has posted up. Um, he has posted. Gosh, I almost kind of want to do. It's going to be a live stream that we'll be doing, so I'm going to end this stream in about 10 minutes, and then we'll come back on for the Power Hour. We'll start another stream back up from 2 to 3, and we're going to have an interview. We're going to talk, and there's hopefully lots of questions. I'm going to have to probably post something on Reddit about the interview so that we can kind of talk and everybody can kind of come in and give questions or listen to the interview and have questions if they want them or need them. But I'm really excited about it. So just stay tuned. Come back. I think it's going to be an exciting hour. We are going to do because we're splitting it up from the day. It's going to be a segment on its own. I'll retitle it. It's going to have. I want to make sure that it's dedicated to his name. Being about question and answer on his DD. It's really, yeah. I'm really looking forward to it. But he's got data that really matches up with a lot of the stuff that I've been talking about, and it's more in depth and well above my head on some levels, on many levels. So we'll talk about that stuff. So I have a lot of questions for him so far. Trying to come up with some more before the time frame hits. He's seeing AMC is trading between 35 and 45 range, and again, I've been talking about this investor gray area at $40 to $45. People are willing to buy under 40. It gets into that $40 range and it becomes this gray area where everybody's kind of like, you know, they don't really want to buy because they're just kind of like, it's just so high right now, and it'll go back down, and it ends up, you know, we hit like, what was it, 46? No, what did we hit? When we got up to the top this last time, it was 49, 46.5, you know, and then we lost. We lost momentum, and part of that was because I think I felt that was the day that I felt they had transferred so much into the dark pools, and I thought for sure we would be in the 70 percentiles, and we didn't. We were only what was it, 67.1%, but then the very next day it was 71%, right? Yesterday. So we did hit 70%. It just took a day longer than I thought. So I think it's important to talk about how can we this is huge. Everybody's talking about dark pools. I'm gonna let him touch on this because I know what the answer to this question is. How can we avoid our trades making it to the dark pools? And I know what the answer is because I've already put into action on my own part to do so. But I think it's important. This is one of the key points that he's trying to make. Is that in order for us to be successful in trying to combat this volume making it into the dark pools, we have to modify how we're trading, and we have to start talking to everybody. It's going to take a lot of buy-in. It's going to take a lot of buy-in to get people to do what it is that probably needs to be done. So if you're just going to hold, if all you're doing is holding, and that's fine. Okay, great. You don't have to change anything. Just keep doing what you're doing. But if you are going to continue to buy from here on out, there are steps as apes that we need to take in order to protect ourselves, to make sure that our representation of our buying power is making it to the correct spot. And that's by avoiding these dark pools. And there is a way to do that, supposedly. I'm all for it. It does make trading a little more complex, not too terribly bad, but it might be more than some people are willing to do. It's probably easier on some platforms than other brokerages. I'm trading through Fidelity, and you have to use their Pro Tools in order to do it. I have no idea how that's going to impact foreign markets. How you guys trade over there, and I'm gonna make sure I include that in there. That's something that needs to be part of that question. So I'm going to add that to that. How can we avoid our trades making it to the dark pools? And then what about those whom are trading in foreign brokers? And, you know, because I mean, you guys are part of this whole community. You guys are doing an amazing job of carrying us in the after hours. I got about 3 minutes left before I end the stream to prepare for meeting up with True Demon and setting up everything for the next hour. So if you have any questions that you want to ask, you can ask it during that time. You know, knowing me, So you have limited control. Yeah, you guys might not. Although I think that there are rules and regulations, and I think some of the reason why we do so well in the aftermarket hours, uh, when the overseas or Europe markets open, I believe that some of the rules that are defined by what can happen with your trading probably are exempted or make them exempt from maybe some of the fuckery that happens. Simply put. So we'll see here. All right, guys. Stay tuned for that last hour. I will close out. I am determined. If there's one thing that I want to keep near and dear and personal to myself for that closing end of the day is that I will have the normal closing out for the day with the rocket launch, and I'll let him know about that because he may not be familiar with how we start the day and end the day, but I enjoy it, and I always think it's a good way to end it, irregardless of what the stock price looks like. So I'll see you guys back here in 20 minutes. Looking forward to seeing you. Hope you have questions, and see you then.